YouTubers. We'll be there in just 1 second, pulling up Discord. There's always that awkward silence at the beginning, right? Excuse me. All right, here we go. Good morning, everybody. Excuse me. How we doing today? No, Paul, I need to make a video for it. Thank you for that. That was a good idea. I haven't put together a gap theory video yet, so that's awesome. Thank you for that. And guys, for those of you that are listening right here in the very beginning, if there's a little concept that you want to see a quick little synopsis on, a little 60-second video on, let me know. I'm taking requests. So that's one of the things that I'm trying to do, is I'm trying to develop as many simple lessons for you guys as I possibly can. Good morning, Erla and Steve and Kenan and Rob and Dee. It's good to see you guys this morning. Hope everybody's doing well. Guys, just a heads up. So had a revelation. I've been trying to diagnose why this super fast computer isn't doing its thing. It's not picking up my SSD card, whatever the hell that means. My brother will help me with that. But this is why I'm chugging so bad. So today's going to be computer fix-em-up day for me. We're going to limp through class and make it work, though. Good morning, Miss Adriana. Hey guys, we're going to do the same thing as every day. Excuse me, allergies are real. I was having an amazing conversation this morning with someone. And they told me, you know, I've decided that what you teach works. And the only way to be able to work it is repetition. The only way to be able to follow a plan is to trust the plan. And the only way that you trust the plan is if you go through the process of seeing it work over and over and over and over again. And I don't think you can rush the experience process. I don't think you can rush getting repetition, right? You can accelerate it by going and doing market replay, by practicing over and over, by seeing these things happen. But guys, the way to get to where you want to be is to work, is to get there, to commit these things to memory. So this morning we're going to talk about what it is you're looking for and how to look for it. But before we do that, we're going to go to news, guys. Today is Tuesday, January 25th. At 9 a.m. right now, there is a little medium impact news, S&P Composite. 10 a.m. we've got the cheeseburger consumer confidence. It's really not cheeseburger, but running joke in the room. And then the Richmond Manufacturing Index is after it. I don't base a plan based on news. I don't take trades because of the news that's being released. What these news releases, high impact and medium impact, mean to me is that somebody with a lot of money may be reacting to the market. Somebody with the ability to make the market change direction. Somebody with the ability to make the market spike into an untradeable frenzy. They may have that reaction, and I choose not to trade there, guys. And if you're with one of those funding companies, most of them tell you you can't trade into news. It's not something that you're allowed to do. So I check it every morning. I'll give you guys the link. This is where I go. I choose to go make eggs, right? I do anything other than trading when these news releases come out. And guys, I'm going to put a request in the room for today. And I know that this is a little different. And I hope that you guys are okay with this. And if you're not, I'm going to have to ask you to work through it a little bit. But when you post in the room today, guys, do me a favor. Give me a screencast link rather than just a copy-paste picture. Because what I've found is that I can follow these links easily. But when it's copy-pasted in and I have to follow the actual picture, that's where I have to reboot the room. So when you click capture, and you take a picture of whatever it is that you're going to take a picture of, and it's time to drop it in the room, guys, if you could do me this favor, instead of just copy pasting, click that upload button, and it'll give you a link. And all you have to do is copy that link. Click copy and drop it in the room. And that's going to make this classroom run a lot smoother, and it's going to keep me from having to reboot buy, sell, stop orders. I like it. I am speaking. Can you guys hear me? Give me a Y. Rob, you notice when people say news in 5, you don't care because you aren't trading? But that's okay, because we're not in trades nonstop, right? But what if, Rob, if there's news in 5? What if there's news in 5 and your rules are met in 4 minutes? Do you take the trade a minute before news and hope that news doesn't mess you all up? Or did that as awareness say, oh crap, I gotta let this one go because I don't want to get caught in that frenzy? And that's why we look for news. And when we say news in 5, somebody may be in a trade. Everybody's got different rules. So somebody may be in a trade and they need that little heads up. And I think probably most of us in this room have been caught trading into news. I know I have. I've taken some pretty big losers, some pretty big slippage in news. Oh, right on. Cool. And just, if you can see in the room, whoever just posted that about the headphones, I can't see your name. It's in white font. So if I miss your name, I apologize. The font is white, and I can't see it. Adamos, thank you. Right on. Welcome to the room, Adamos. Oh, there you are. I see you off to the side. Cool. For those of you that are new, I know I've got some new people in here. I am excited to have you in here. And just to give you a little heads up on how this room works, guys, the first hour, we're going to talk about what's called a high probability trend trade. We're going to talk about a trade that typically wins 70 to 80% of the time. Morning, Elvis. We're going to talk about a trade that creates an awful lot of confidence through the memory of success. And the whole focus of the first hour of this classroom, guys, every day is teaching you to recognize advantages, teaching you to understand what your indicators are telling you so that you know if it's time to take a trade. Everything that I talk about comes from the education, the trading guide right here. The trading guide has all the answers, guys. If you can't find it in here, then you probably don't need it yet if you're a brand new user. I'm going to go to the glossary of common terms first because I want to show you guys a couple of things. Pete, you were wondering about those pink dots. Those are small swing 1-to-1s. There's an example. If you're trading the NASDAQ, they can be important to you guys. If you're not trading the NASDAQ, I tend to ignore them and tune them out. But you'll hear things like 1-to-1, divergence, reversal bar marker. Go through glossary of common terms. Take 5 minutes. Click on some stuff. Make sure that you're cool with the terminology. Thanks, Paul. But the one that I'm going to focus on for a whole hour, guys, and I'm going to tell you right now, guys, your ability to do what we do comes just through repetition. I will give you everything that you need, I promise. I'm going to give you everything you need to read your indicators. I'm going to give you everything that you need to study how to read your indicators. I'm even going to put a very simple plan in your hand to make sure that you can focus on the absolute best of the best. Adamos, the ES is much slower than the NASDAQ, and it's a great place to learn, without a doubt. But what I'm going to do is we're going to focus on this high probability trend trade. We're going to focus on the trade where each indicator on every chart agrees with the rules for the trade. And this is when your triggers are the strongest, guys, and this is when there's nothing between you and your targets and no termination conditions exist. And guys, this is a trade that's going to teach you not only to read your indicators, but it's also going to teach you some patience. You're going to realize that successful traders don't catch every move, that successful traders aren't aren't trying to capture every dollar of the billions of dollars traded every day in the market. Successful traders trade patterns. Successful traders do the same thing every day because it's been proven to win more than it loses. So we're going to focus on a plan that embraces that gives you the opportunity to recognize a simple pattern that wins more than it loses. And guys, this high probability trend trade will not only give you the opportunity for success as you learn the software, but it's also going to turn you into a chart reader. So for all of my new users, this is the goal. Coming straight out of the gates, don't worry about the money. Not yet. Worry about being able to read your indicators, because it really is. It's about 90% of your day, guys. 90% of your day is spent just looking at your charts and saying, hey, are my rules met? Because your rules provide that advantage that you need to know that the pattern you're trading wins more than it loses. And once you're good at this, once you're confident with chart reading, you're going to understand where the market is likely to continue, and this becomes your entry for the highest probability trend trade. You're literally going to pinpoint right where the market is most likely to bounce in the direction of your trade. You're going to understand where the market is likely to go using a couple very key concepts, momentum, Fibonacci, and then you're also going to understand where the market is likely to stop. And guys, once you're a chart reader and you have these three concepts, nobody can take that from you. You're going to use that ability and expand way beyond this high probability trend trade. But in the beginning, we're going to keep it very simple. And honestly, we're going to take an hour this morning to figure out nothing more than where to get into the market. Guys, we're not even going to talk about management yet. We're going to use the high probability trend trade. It's only 3 rules. Each rule provides an advantage. Your job, brand new users, your job is to be able to look at your chart and ask yourself and answer correctly, do I have momentum because my large chart has strong triggers? Do I have a clear path because there are no termination conditions? And if these two are absolutes, if these first 2 rules are true, well, then you're going to look for an entry area. And this is kind of going to be true not only with the high probability trend trade, but when you start looking at medium probability trades, when you start looking at momentum trades, when you start looking at HVA trades, you're going to use these 2 very simple concepts to be able to find more and more as you grow with the software. These 3 rules, guys, they happen on only 2 charts. We use 2 charts because simplicity, guys. Simplicity is the way to do it. All it takes is 2 charts to find a high probability trend trade. And to be honest with you, the large chart does almost 70% of the work. The large chart is going to define the direction of the market. If the background is red, it's going down. If the background is green, it's going up. Brand new users, going with the trend is really the easiest way to do things. The large chart is going to define the momentum of the market through rule number 1, whether or not you have strong triggers. And the large chart is going to define the areas in the market, the areas that can be problematic, guys. The small chart is an entry chart. The small chart will ultimately become a management chart. But the small chart gives this x-ray of this one slow bar on the large chart. If I put a box around this one bar, it looks like it has a bottom. It looks like it has a tail. The very bottom of this bar is the beginning of a pullback on a smaller, faster chart. We're going to use that pullback to pinpoint exactly where the market is most likely to continue, right where the top of that tail is most likely to form. This will become your entry, this refinement process. And it's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And guys, we use those 2 charts because they're really a reflection of the people that move the market. Your large chart is the large crowd. It is 50,000 people that want the market to go up. It is 100,000 people that want the market to go up with momentum. And it is 1 million people that are going to react to those key Fibonacci areas. So when you're trading with the large chart, man, you're going with the flow. It's like being in a lazy river. You got a pina colada. Life is good. There's always a small crowd, though. Don't be the small crowd. The small crowd's going to fight the large crowd. They're going to fight the trend. They're going to fight the momentum. And sometimes they have enough money to give this little shove, this little pushback, that retracement that's going to get you guys in at the best of the best spot. And guys, the small crowd loses 70 to 80% of the time. The small crowd can't overcome the large crowd 70 to 80% of the time, which means that 70 to 80% of the time you can take their little fight, pinpoint your entry, and find victory, guys. And this is kind of the pattern that we're looking for. This is what creates the advantage. The easiest way to get to where you want to be is, first, remember that you're never in charge. These guys are in charge, you're a remora. If you try to be first, you're going to get swallowed, guys. Let the people that move the market move the market. Let them create the advantages that we need to trade, and then let's just capitalize on it. So there is a step-by-step path to becoming a confident trader ASAP. It begins with posting in the room, guys. The more pictures you take and the more you post in the room, the quicker you're going to get to where you want to be. That's perfect, Jonathan. That is absolutely perfect. Thank you for doing that. That's going to make my life so much better. I will get my computer fixed today. Post in the room, guys. Tell me what you see. Post in the room. If you take a trade, put it in the room. If you lose that trade, especially put it in the room. Because we're going to work through it together, guys. I'm here for 15 hours every week. And every picture that you drop in the room is like having a private session with me. We are going to talk about each and every time you drop in the room. We're going to look at momentum. We're going to look at whether or not you had a clear path. And we're going to talk about your entry area. Which means that every time you post in the room, to get the absolute best feedback from me, I need you to talk about your rules, guys. I need you to talk about what you see, because the goal is to become a chart reader, and my goal is to help you become a chart reader. So talk about the momentum on your chart, right? And if you make a mistake, that's cool. It opens the door for us to have a lesson. Talk about whether or not you had a clear path. Show me exactly where you entered. Show me where you exited. Because what happens is all we're going to do is we're going to talk about, did you have the advantages in place? Were you fighting something? And guys, you're going to fight stuff as you grow as a chart reader, but you got to know what it is you're fighting so you know how aggressive to be in your management. We're going to talk about maybe you can find a better entry. Maybe your entry was perfect. Maybe you could have held longer. Maybe you should have gotten out sooner. We're going to talk about this every time. That's the best way to get to where you want to be. And if you're brand new, you see a lot of people posting in the room. Once we discuss rules, we get through the first hour, we discuss rules, that's when I go back and that's when the chart reading happens. We're going to look at everything that you guys post. We're going to go back and forth on the live market and just kind of do some chart reads. But the first hour is rules, guys. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. You guys need to simulate, practice. I want you to make mistakes, because every time you make a mistake, you actually get better if you present that mistake, if we talk about that mistake, if we discuss how to avoid that mistake. My hope for you is that you don't practice the wrong rules. Once you're practicing having an advantage every time you get in the market, and I want you to practice like you're going to play. I want you to pretend like it's your kid's college fund, or like it's your wife new diamond ring fund, or whatever that is, your beer money. Pretend like it's real, your golf money. And what happens is you're building that muscle memory to begin to follow your plan. We're going to simplify, guys. I'm going to focus on the high probability trend trade. I'm also going to give you a plan for a medium probability trade and exactly how to take it for the highest chance of success. You have to know what looks you're going to commit to. You have to understand what it is you're looking for. You have to learn these looks so that they become easy. And that's where the second piece of becoming a confident trader, the quickest way to do it, comes into play. I've already dropped it in the room at the very top, guys. But Nexgen provides you a spreadsheet. Mine's opening up. Guys, this spreadsheet is how you're going to create recognition. The first tab, every time you take a trade, it should go into this first tab, because this is where each and every morning, whatever you do today, you're going to come back and study tomorrow, and you're going to ask yourself what worked, what didn't work, what felt easy, what felt forced. So show of hands, guys. Let's have some honesty in the room. Who studied what they did yesterday so they could be a little better today? Who looked at the trades they took yesterday? Guys, the most successful traders I know go through this process every day. They trade journal, they look at what they did, and they start by creating this this is what I need to do and this is what I need to avoid. This is what I'm trying to make happen and this is what I'm trying to not do. And guys, what you'll find is that if you do this every morning, it's going to prepare you for the day. It's going to accelerate the learning, because what happens is you're literally focused on the advantages that were bringing you success, and you're hyper-focused on not looking for the things that seem to be taking those advantages away from you. And that's where posting in the room comes in too, guys. Everybody has a thing. Everybody has a thing, right? I jump in earlier, I trade in determination conditions, or I can't hold for those bigger moves because I'm scared. If you're posting in the room, guys, I'm going to recognize your things. If you're going through this drill every day, you're going to recognize your things. Steve Diego, did you have any moments where you're like, oh man, look at that? Guys, my whole trading career has been off of studying pictures. I learn more going through still pictures than I will ever learn being in a trade. Because in a trade, you're working through emotion, you're working through adrenaline, you're working through fear of loss. But if you go back and look at pictures, guys, if you go back and look at pictures, that's where the client trade section comes in. I've given you 350 pictures. Well, then you can start to identify advantages with no fear of losing. You can just see what they look like. Client trades has entries, it has management, it has patterns. For you people that want to be NASDAQ traders, there's a whole section. I've blown out a slew of accounts to create the NASDAQ section. But I'm going to tell you right now, if you don't know what you're looking for and you try to trade the NASDAQ, you're probably going to take 32 different levels of ass kicking. Just throwing that out there. You're going to build your plan. This is what favorite looks are for, guys. The favorite looks is where every time you have a trade that fits your rules, where you have a trade that's easy, that keeps you relaxed, that keeps you focused, drop it in here, build your trading plan. But here's the biggest deal, guys. This is the 101 tab. I only talk about 3 rules. I talk about strong triggers, I talk about a clear path, and then finding the entry, guys. These green sections are what it looks like to have your rules met. And what's funny is people post in the room, I had strong triggers, when in fact the triggers were weak. And if they would just take the time to take some pictures, to recognize, to create awareness, they would never miss strong triggers. They would never trade in determination conditions, and they would probably never miss the high probability entry. But guys, this is one of the most ignored parts of the study process. For whatever reason, day traders hate to do work, and it's crazy because you're all these alphas that were successful in your careers, and you don't want to do the work to become a day trader. You gotta do the work. You gotta know what they look like so they become easy. And one of the biggest reasons that I give the illusion of being good at what I do, guys, is I'm looking at charts when nothing is moving. I'm looking at charts and I'm reading your indicators with no fear of loss. And I'm telling you, if you go back and you read your charts without any fear of loss, you're going to become an awesome chart reader. So let's get going, guys. Let's talk about some rules. As always, I encourage you guys to interrupt if you have a question. I encourage you guys to be doubtful, to be suspicious. I encourage you guys to be skeptical as you begin to develop trust. And I will teach you how to develop that trust. But it's okay to ask a question. Just because I say something once doesn't mean that you're going to get it, right? Just because you tell me one time don't touch a hot stove, guys, I'm the personality. I'm going to touch it at least 73 times to make sure that you weren't lying to me. And that's just my own personality. So guys, question everything. But we're going to start pretty simple, guys. We're going to learn the rules. We're going to do it on 2 charts, large chart, small chart. This one's going to give us 66% of our advantages. Rule 1 and 2 happen on the large chart, and once they're met, and only when they're met, we're going to refine that broad stroke of a brush that the large chart provides, and you guys will be able to pinpoint exactly where the market is most likely to continue. Rule number 1 says strong triggers, guys. Rule number 1 says the market must have strong triggers. Strong triggers create the advantage of momentum. On a large chart, the only way to have strong triggers is if you're trading with a trend. So by default, it keeps you from fighting the trend. In an uptrend, when the background is green, strong triggers means that your small triggers, those solid lines, And your large triggers, those dashed lines, are also green. When the small triggers are up and above the large triggers, when the large triggers are widening, there's space between the two. I want you to look at those trigger lines. It looks like scissors opening up, ready to cut. When those scissors open, when that space is created, guys, the odds are favorable for the market to continue up. When you have that, what we call odds favorable momentum, this is the best of the best time to buy Fibonacci support on that smaller, faster chart. Man, Pete, you know, if you just follow a plan, you wouldn't have to eat dog food. But go take care of the puppies. Always take care of the puppies. In a downtrend, when the background is red, guys, small triggers have to be below the large triggers. Both triggers have to be red. Those scissors are open. The space between the two lets me know that the odds are favorable for the market to continue down. Guys, odds favorable momentum. This is our battle cry in class every day. Odds favorable momentum pushes the market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum, guys, will even cover some of the mistakes that new users make or give you the advantages to bend your rules just a little bit because the market is moving so fast. On a smaller, faster chart, we refine it to pinpoint exactly where these tails are most likely to form, guys. But when everything is up and strong, we're looking to buy Fibonacci support. When everything is down and strong, we're looking to sell Fibonacci resistance. Let me show you odds favorable momentum in a live market, ladies and gentlemen. When everything is strong, when there's separation between the small and large, I'm going to sell Fibonacci resistance. Looks like a tail. That's my strong triggers. When everything is up, everything is strong, space between the two, that's where we can sell Fibonacci support. Guys, your job to create recognition is to come in and take this picture. I'm going to take it with Snagit. Can I get a Y in the room, though, from you guys? This is odds favorable momentum up. This is odds favorable momentum down. So if you take this picture and you say smalls above large, large wide, space between, this is strong triggers. This is the advantage of momentum. This is rule number one met. And I'm going to get rid of this arrow. And there it is right there, guys. And there's no way to ever miss this strong trigger look if you go through this process, right? And then if I copy this, I don't know what you're saying, Elvis. Whoops, wrong one. And then the same is true right here. Smalls below large. Large wide, space between. This is strong triggers. This is momentum. This is rule one met. And guys, when rule number one is met, Elvis, we're only looking at momentum. We're not talking about entries. When rule number one is met, guys, this is the best time to use a smaller, faster chart to buy Fibonacci support. That's what this tail represents. That pullback on a smaller, faster chart, or to sell Fibonacci resistance. So guys, if you take this picture and then you go to your spreadsheet and you drop it in and you say, you know what, here's that strong trigger look. Here's that best of the best. Here's rule number one being met. The likelihood of you trading without strength goes down. And then if you can have strong, you can have weak. The opposite of strong, guys. When the small triggers return to the large triggers, when those scissors close, this is what we call a weakening of the large triggers. This is visually letting us know that the trend is slowing down. When I have these weakened large triggers, guys, anything can happen up or down. And it's quite a stark contrast, right? Odds favorable for the market to continue. Anything can happen up or down. And guys, anything can happen does. Sometimes it retraces huge. Sometimes it reverses. So you've got to understand the life cycle of momentum. Brand new users, this is the best of the best. Embrace momentum. It pushes a market. It's hard to stop a large chart that is screaming in the direction. When one line of the small triggers wakes inside, what happens is that you can say to yourself, I'm losing momentum, it's slowing down, I still have it, but it's not odds favorable. And guys, once you're a chart reader, you might find opportunities here. But once both are inside, you just have to say, man, anything can happen up or down. That doesn't feel like an advantage. I'm not going to risk my money on anything can happen. And guys, when these anything can happen triggers hit areas, these areas are more likely to hold. So brand new users, large chart is going to define your momentum. And it's going to do it with that simple separation of the triggers, guys. The large outside, this is going to lead the way. This is going to be the best of the best. And if I pull up this large chart, guys, you're going to see it all day long. You're going to see strong triggers. There's that weakness, and sure enough, a reversal. You're going to see strong triggers. There's that weakness. Sure enough, there's a reversal. Weak triggers creates a push down, right? Weak triggers, there's that big hit down. And what happens is you're going to start leading the way just by saying, do I have momentum? So guys, on a large chart, most current bar, small triggers above the large triggers are wide. That's a pretty good look, isn't it? That says this is a market that's likely to continue up. That says this is a look that could push us up further. That's rule number one met. But guys, rule number one is only the first rule. We're going to put some areas on this chart, and we're going to go to rule number two. And we're going to make sure that termination conditions are false, guys. Termination conditions are just areas that might stop the market. And when there's none present, I'm going to have room to my profit targets. And when I have room to my profit targets, we're going to call that a clear path. The second advantage that we look for to look for a high probability trend trade. The areas on a large chart, guys, remember, this is where the large crowd's making decisions. This is where the people that move the market, that create the trends, that establish the momentum, this is where they may be entering and exiting. This is where they may find themselves in fights with the opposing forces. This is where untradeable bounces come from, guys. So we're going to use the trigger lines and do a little comparison of where the triggers are compared to Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, and these divergence high and low lines. And that's going to let us know if we've reached a termination condition. So it's going to be just like this, guys. We're using support for the example. This support could be a divergence low. This support could be yellow 1-to-1s. But the first thing that has to happen is price reaches an area, guys. Because who makes decisions before they get there? It's like ordering a cheeseburger at McDonald's when you're still 4 cars back from the microphone, right? We got to get up to that decision-making point. Price reaches the area. When price reaches the area, the only thing you guys have to do is ask yourself, where are my triggers? If your triggers remain above support, support's a termination condition. Guys, absolutely no trades into this area. It may stop the market. It may create an untradeable bounce. Hell, it might even reverse the market. But what you have to say is, I don't know. Nobody sent me a memo. Nobody sent me a text. I don't know what's going to happen, but with my triggers above support, I choose to do nothing because I do not have a clear path. Is everybody good with that? Because when price reaches an area and the triggers don't break, it's likely to hold. When price reaches an area, guys, these are the key areas that are creating reversals in the market. These are the key areas that the people in charge are recognizing and bouncing off of. And it doesn't have to be difficult. If price reaches them and the triggers don't get through, sit on your hands. We'll consider the area broken, we'll consider the path clear when both the small and the large get to the other side of the area. Not the price, right? Price hitting it sets off the decision-making process. When the small and the large triggers get to the other side of support, support's behaving as resistance. The area is broken. The path is clear until you reach the next spot. So for you brand new users, for my high probability trend trade learners, let's see if we can find an example of an area breaking. We'll blow this up. Price reaches Fibonacci support and the triggers remain above. Does everybody see it? This is a termination condition in the moment. There's nothing to do. You have to wait. When the small and the large get below the areas are broken. The path is now clear. But you'll notice that the triggers are weak. So we're piling these rules one on top of the other. I want you to see what happens with those anything can happen triggers. Anything happened. So we're using the combination, guys. Even with odds favorable momentum, price hit Fibonacci resistance to the tick. When the triggers remained below, this was a termination condition. And this termination condition pushed us right back to support, and all the triggers remain above. 90% of your day, guys, is waiting for the advantage. We're waiting for the path to clear. Is everybody on board with this? Let it be simple in the beginning. You either have a termination or you have a clear path. The more you try to figure things out beyond that, the more difficult it is to recognize these in the moment. But once you're good at this, once you can say it's a term, it's a clear path, it's going to open the door for your next trade, the medium probability trade. This is what we call a 50-50 look, guys. I say 50-50 look, not 50-50 trade, because a 50-50 look is nothing more than identifying where your triggers are. When you reach support and none of the triggers break, sit on your hands. If odds favorable momentum smashes those small triggers through the area, think like 3 to 4 points smash through. Not peek in their head, but literally just boom, annihilating that area. Guys, this area now has the potential to break. But until the large triggers get to the other side, it will never be considered a clear path. And if it's not a clear path, guys, that means that under no circumstances could we ever call it a high probability trend trade. Which means that if you're going to take that trade, you have to rely on that momentum, and you're going to use your entry rules to define a low risk entry. So not broken, no trade. Potential to break, our chart reading will tell us if we have the advantages we need. Broken path, man, let's look for the rules met to find the next area. And guys, allow it to be simple like that initially. And if we go back to the large chart one more time, does everybody see how even with odds favorable momentum, this market stopped to the tick? If you don't believe that the forces that are in power know exactly where these hours are, where these areas are, go back and study them. You'll be absolutely floored. Weak triggers, there's your reversal. Potential to break, guys, and sure enough it does, and down it goes. Potential to break, sure enough, off it goes. The small triggers broke through, but the large triggers didn't, and the market holds. Guys, this is what we call the gap theory right here. Let me make this bigger. If price accelerates away from those large triggers, hits a mid-band, and the large triggers are a full bar away, guys, price loves to close the gap to the large triggers. This gap theory keeps you from taking shorts. This is when the mid-band behaves as a termination condition. Sometimes the market does turn from the middle of nowhere, right? We're not in control. Potential to break, huge retracement, and down it goes. Once again, termination of the tick. Guys, I want you to study this, and I want you to keep it simple. And remember that 90% of your day is waiting for advantages. Here, price reaches yellow 1-to-1s. Let's do the picture thing today for my new users. I'm going to go through a couple different things on this one. The first one is that you're never in charge, guys, and strong triggers can break areas, and that's exactly what happens. These strong triggers absolutely smash through Fibonacci support. No opportunities for anybody to get in. It's just wailing through. And then it reaches yellow 1-to-1s. If you're feeling a little put out that you didn't find an entry, guys, you might try to break rule number 2. But rule number 2 says if price reaches an area and the triggers remain above, absolutely no trades. Don't do it. You've lost your advantage of a clear path, even with momentum. Guys, excuse me just 1 second. I'll be back in 30 seconds. Sorry about that, guys. So price reaches yellow 1-to-1s. Triggers remain above. Each and every person in this room says to themselves, wait a minute, I don't have a clear path. No short trade. And then there's this big untradeable bounce, and you're thanking your lucky stars that you didn't trade into that area. But notice that price pulls right back to resistance and the triggers remain below. You're in this little, man, there's nothing to do. I can't go long, I can't go short. You'll notice that the small triggers and the large triggers don't agree with each other or the background. No momentum, still below, still no momentum. Into one of those mid bands with the large triggers a full bar away. Only the potential to break, but it's not broken. Guys, this is your 90% right here. This is you teaching yourself to do absolutely nothing when there's nothing to do. Guys, this 90% is where I watch people blow out accounts all day long, forming opinions about what the market's going to do rather than simply saying I don't have the momentum or the clear path that I need. It's not uncommon to get caught in the fight if you don't have Nexgen, but ladies and gentlemen, you have Nexgen. You have rules to keep you out of this. And I want you to see what happens. Eventually, smalls are outside of the large. Everything's above resistance. It's behaving as support. And guys, there's one of those tails, right? On the refinement chart, on that smaller chart, this becomes the entry for the highest probability trend trade that you can take. The one that happens after a termination condition reverses the market. This is the best of the best, guys, and this is about a $450 move. We'll call it 400 just to make the math easy. If you sat on your hands and did nothing when there was nothing to do, there's $400 in your account taking the high probability trend trade. If you were down here and you formed $1,000 worth of opinions, you're still down $600 on the day. And you're still angry and you're not allowing these advantages to produce the results that you need them to produce. So learning to do nothing when there's nothing to do, guys. Choosing, watch this, choosing, it's a choice. Choosing to not trade into termination conditions. Choosing to not take shorts without the advantage of momentum, guys. These are the things that are designed to get the new user in a position where they can make money nearly every day if they learn to have just a little bit of patience. So is everybody good with that? This is our rule number 2, guys. Rule number 2 says no terminations. We're going to couple the clear path with momentum and look for opportunity. We're all good with this though? Strong triggers, terminations. Let's look for an entry. Okay. Large chart, guys. Large chart lines define the problems. Large chart lines are where people are making decisions. Sometimes your market just reverses from nowhere, right? But Mark, there wasn't a fib. Why did it go up? Well, because somebody wanted it to go up. We're not in control. Mark, there was odds favorable momentum and it didn't reach Fibonacci resistance. How come I lost? Because some jerk with a bunch of money decided to push it down. We'll never be in control of that, guys. But there's one termination condition on the small chart that'll help you see this change that you won't see on a large chart. And it's 3 divergences, guys. 3 divergences in the same price range may terminate the trend. Notice that the word is may. It's not will definitely, it's not absolutely, it's not guaranteed, but 3 divergences in the same price range may terminate the trend. What's divergence? When the market comes down and goes up about 3 bars, this down and up is a pivot. This up and down is a pivot. Pretty simple, right? Most of you know that terminology. If the momentum of the market does not keep up with price, you're going to see this blue line from a low. You're going to see this pink line from a high. Magenta, cyan if you're being factual. But anytime there's a loss of momentum in the market, divergence prints. Divergence is a loss of momentum. If you get 3 losses of momentum in the same price range, guys, it may terminate the trend. If you get 3 losses of momentum in the same price range and you have those ugly anything can happen triggers, it may terminate the trend. It's more likely. And if that third pivot's higher than the previous or lower than the previous from a high, guys, it's a deal breaker. That's your termination condition. That's the only time on a small chart where I'll say rule number 2 isn't met. The path isn't clear. And what you're going to be able to do is see this at a low and see this at a high and say to yourself, I don't need to take a shot at this last short trade. This long trade is less likely to work because those 3 divergences print. And it'll help you recognize change using a small chart that you can't see on that big, slow, fast chart, guys. That's the only termination condition on a smaller, faster chart. So what do we do when we have momentum? When the large chart says that everything is doing what it should do, when the large chart says up, when the large chart says that the momentum is there, when the large chart says that the path is clear, when the large crowd is really cranking it out, guys, we're going to let the small crowd do their thing. And rule number 3 says that you can use a limit order, which means that you're literally going to be able to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback, one of those little pushes by the small crowd. And you're going to let that pullback come to an area. Fibs, mid bands, yellow 1-to-1s. And to really find the success that you're looking for, we want those areas to be inside of triggers. And we do that because triggers are correction points. Triggers are moving averages, and price loves to return to the trigger lines, guys. Price loves to pull back and hit the triggers. It loves to pull up. That's how we get that gap theory and return to the triggers. We don't expect triggers to stop the market, guys, which is why we put areas inside of those triggers. And what we've done on the entry chart, on the smaller chart, on the faster chart, is we've taken the correction point, the large triggers from the large chart, and the correction point, the large triggers from the small chart, and when they overlap one on top of the other, guys, you end up with the exact same spot where you expect price to return to, that correction point. And when you shove some areas inside, holy smokes, you've given it something to bounce off of. And this is where our entries come from. Buying or selling a pullback to areas inside of favorable large triggers. We don't trade tails, we trade pullbacks. Your pullback will pinpoint exactly where this tail is most likely to form. So there's 2 trigger looks. New users, you should have 1 trigger look, what we call favorable large triggers. When the correction point from the large, the synthetic triggers, and the correction point from the small, the large triggers, are overlapping one on top of the other, you're going to hear me refer to this as favorable large triggers. Favorable large triggers reduce risk. Favorable large triggers, gets hard to say, increase the accuracy, minimize the risk, and give you the smallest point where we can shoehorn those areas in to give the market something to bounce off of. Just like everything, guys, the opposite of strong is weak. The opposite of termination is clear path, right? The opposite of favorable large triggers is split large triggers. And when they're split, you literally have 2 correction points. Is it going to go to the large triggers or the synthetic triggers? Hell, I never know. Which means that my accuracy is decreased, which means that my risk has to increase. So for brand new users, favorable large triggers is where it's at. These are the easy ones. These are the low risk ones. And to pick your entry, guys, the process is always the same. And let me back up 2 slides. It begins with large chart rules being met. You have to have odds favorable momentum. You have to have a clear path. And the market will be trading somewhere up here, guys, when the rules are met. So you're going to turn to a smaller, faster chart, and you're going to let the small crowd do their thing, guys. You're going to let those fighters start fighting, and it begins with a reversal bar. This red bar after all of these green bars says that the small crowd is fighting, guys. The reversal bar is not your entry. The reversal bar is nothing more than letting you know that we're on the wrong side of that momentum indicator, that pullback is probably beginning. And once this reversal bar prints, and once you're good at this, guys, you're going to start anticipating reversal bars and looking for your areas. But the process is, when the reversal bar prints, find your triggers, large and synthetic. They should be one on top of the other, overlapping like 2 snakes riding piggyback. And then once you've identified your triggers, we don't expect price to bounce off of the triggers. We're going to create a window of opportunity, the point where the market is most likely to continue. For a long trade, it will extend from your highest point of support to your lowest point of support inside of favorable large triggers. So this blue shaded box, from the mid band, the highest point of support, we're looking for fibs, mid bands, yellow 1-to-1s, to the lowest point of support, happens to be yellow 1-to-1s. This blue box represents where the market is most likely to continue, where it's most likely to go on with that trend that's already been established, where it's most likely to bounce and go with that momentum and clear path. Because of all the advantages on the large chart, you guys can activate a limit order right at the top of that window. Because of all the momentum and the clear path, we're not expecting the small crowd to get a lot done. This becomes your entry for the highest probability trend trade. Shorts are no different. We wait for the reversal bar, but the reversal bar is not the entry. It signals the beginning of the pullback. We're going to find those trigger lines, but the trigger lines are not the entry. They're only telling us where we expect these price bars to return to. The areas inside of favorable large triggers for a short trade, from the lowest point of resistance to the highest point of resistance, will create your window of opportunity where the market is most likely to bounce. Your job as a high probability trend trader is to activate a limit order a couple ticks below that lowest point of resistance and hope the small crowd gets to it, guys, because this becomes your entry for the absolute positively highest probability trend trade. You are defining exactly where the market is most likely to continue. And when you know where the market is most likely to continue, guys, you know where it shouldn't go. It shouldn't go beyond that correction point. Shouldn't go beyond those trigger lines. So the tighter they are, the least amount of risk you're going to have, because your stop's going to go 4 or 5 ticks beyond that correction point. Same thing for a long trade. It's going to go below those triggers, below those areas. And guys, the small crowd wins 20 to 30% of the time, which means 20 to 30% of the time, your stop is going to get hit. It's okay. It's a cost of doing business, normal part of a positive equity curve. But more often than not, you're going to get a reversal bar in the direction of your trade. And once you get a reversal bar in the direction of the trade, you can reduce risk even further. You can say to yourself, the momentum, the clear path, everything is pushing the way I need it to push. Let me reduce my risk. And guys, Nexgen users, with the ability to pinpoint where the market is most likely to continue, with the understanding that once it starts to go in that direction, reducing risk makes sense, it's not uncommon to see these trades fail that 20 to 30% of the time, but you guys only lose 30 or 40 bucks because of a sound management plan. But you've got to be able to identify where the market is likely to continue first. By waiting for the pullback, it increases the distance to your target. It reduces the amount of risk that you put on a trade. The current ES, Rob, ES 0924. ES 0924. We're in the September contract. So guys, are there any questions about a high probability trend trade? Are there any questions about momentum? Look at that. Are there any questions about termination conditions? Even with odds favorable momentum, look at how the divergence lows stop the market. Divergence low directly into it. Look at the bounces. Are there any questions about the high probability trend trade? Are there any simple concepts that I can clear up for you? Whoops, let me cancel that. All right, so here's where the gift giving starts, guys. I'm going to begin with Chart Reading 101. This is designed to make you a chart reader. You can choose to embrace it or you can choose to skip it. One is going to get you where you want to be quicker than not. The other is going to delay your progress, guys. In order to become a high probability trend trader, in order to be a chart reader, an effective chart reader, you have to be able to understand these very simple concepts, and you got to be able to do it quickly. You have to understand strong triggers, clear path, and an entry. So in order to get to where you want to be, guys, all you have to do is put it up, Jonathan, and we will discuss. Is it about a rule? Or is it a trade? If it's a trade, we'll get it when we go into trades. If you have a question about a rule that you're putting up, let me know. And let me know. And then Adamo, I go in order. And I'm going to remind you right now, you got your picture down. Looks good. There's a couple things that you didn't do on that picture. And that's okay. We'll do them together. You didn't discuss momentum. Nor did you discuss a clear path. And I don't see any reference to your entry area. So, Adamo, my goal for you guys is to be able to repeat. Price reaches a divergence low. The triggers remain above. You're trading into a potential termination condition. You waited for the pullback to resistance right by the upper correction point. Your stop's in the right spot. So what you're doing is you're using momentum coming from a termination to say, man, this looks good. If you were going to take this trade, Adamo, you did it in the right spot. Your stop makes sense. But you have to understand that it's not a high probability trend trade. And I love where your target is. It's right there at the next line of trouble. So gold star, did you recognize that you were trading into a termination condition? That's the only thing I'm going to ask. Did you recognize that you were trading into a termination condition? Notice that there's no divergence on your pullback. Notice that it's odds favorable momentum. And you're coming from a termination condition. Yep, this is what we call a divergence low. See how this divergence high, weak triggers right at it, reverse the market? The same thing could have happened here. With all that momentum, with the perfect entry, with sound stop placement, you were willing to take a shot on what isn't a high probability trend trade. But once you understand that this is the challenge, what you can do is you can say, I accept this challenge. I'm going to go in and I'm going to take this trade and I'm going to get out of trouble and I'm going to manage it tight, and I like it. I like everything about the trade. And Doug says there's about 3 to 5 good high probability trend trades a day. 3 to 5, Doug. How much money if you took 5 trend trades, right? And only 3 of them won? Do you suppose you could make $500 a day like that? This is the question you guys have to ask yourself. And for those of you with a little experience, if you took 3 to 5 trades a day and 70% of them won, could you hit your daily goals? Doug says yes. If you're brand new, you probably don't know the answer yet. If you've been with me longer than 2 weeks, then you know that you can. So guys, here's the question. Why on earth are you trying to catch so many trades? Why are you trying to catch every move in the market instead of just the best moves? It's because you all have egos just like me, because you hate to be bored, because it's tough to sit and do absolutely nothing. And guys, the people that make the most money as day traders are the people that do absolutely nothing when there's nothing to do. But you got to be able to read your indicators. You got to be able to identify it, guys. Go through and take these pictures, strong triggers, weak triggers, clear path, termination, and start filling out your spreadsheet. Become a chart reader, because you're never going to miss strong triggers if you have this. Adamos is always going to know he's trading into that termination condition, right? Which means that he knows exactly how he has to manage his trade because it's not a clear path. And he'll couple the other advantages. Guys, use this sheet. Whoops, wrong one. Use this sheet and become a chart reader. Talk about the whys. Learn to piece the individual parts. Learn to speak to yourself in terms of advantages. Next, I'm going to give you a high probability trend trade checklist, guys. And this is nothing more than a way for you to know if your rules are met. So, Adamos, going back to yours. Was this a good trade? Well, did it fit your plan? Did it fit your rules? Guys, there are no good trades and bad trades. There are your trades. And if your trade is the high probability trend trade, then Adamos, I'm obligated to say, no, you screwed up. You trade into a termination condition. But guys, that's not very effective in a classroom. So what I do is I say, let's talk about momentum, and it was awesome. And let's talk about the clear path, and it wasn't there. But let's focus on all of the advantages and the ability to make money, and let's grow from that point. So if you're a high probability trend trader, guys, shame on you for breaking your rules. If you're a chart reader, way to take all the advantages and find a way to capitalize. And guys, that's kind of the growth process. But if you always go back to the rules in your arsenal, you'll never ask if it was a good trade. You'll only ask, did I follow my rules? And the execution creates the advantages. So this high probability trend trade checklist, guys, I've never had anybody use it and do worse than 70%. This is exactly what Doug was talking about. 3 to 5 trades a day, the ability to hit your goals without stressing about anything. You just got to learn to sit on your hands. As you're learning to take those pictures, to identify stuff, guys, the high probability trend trade checklist with the pictures of what it means to have your rules met, strong triggers, weak triggers, termination, clear path, window of opportunity, long and short, it's all there for you. I've put that in the room as well. And then we're going to come to this one, guys. So if you scroll up to the top of the chat box, I just want to show you guys real quick. I'm going to do it for you. At the beginning of class, I gave you guys everything that you need to be successful. I told you that I'd do it. There's a copy of my tracking sheet, so you've got all of my homework already done for you. You've got the PowerPoint that I used to teach the class. You have the Chart Reading 101. You have the high probability trend trade checklist that you can print and put on your desktop. You have the one with pictures. And you also have the KISS plan for not only the high probability trend trade, but also that medium probability trend trade that I told you we were going to talk about. But your KISS plan, guys, this is the beginning. This is your foundation. The KISS plan is what keeps you focused on the best of the best. The KISS plan is what teaches you to read your charts. And guys, the KISS plan is a stepping stone in your learning journey. The KISS plan is designed to optimize your chances of success with the high probability trend trade. The KISS plan keeps you focused on the mechanics that produce the results. And then through simulation study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that's AI saying that once you're a chart reader, you're going to see more opportunities. Once you're a chart reader, you're going to do exactly what Adamos did. You're going to say, I've got more advantages than disadvantages with that blue line. Let me take a low risk entry and see if I can get paid. But until you're a chart reader, guys, you're not going to understand how to do that. So the simple plan for consistency, guys, don't fight the large chart. Don't fight the trend. Don't fight the momentum. Don't fight the areas, right? Let the large chart lead the way. Go with the flow. And then you've got to define your entry, guys. And defining your entry is the same whether it's a long or a short. Everything begins with the advantages on the large chart. Everything begins with identifying odds favorable momentum and that you haven't reached the area yet on the large chart, because the large chart lines define the problems. Once you have that look on the large chart, the only thing to do is to wait for a reversal bar on the smaller, faster chart. And once you get the reversal bar, you're not jumping into the market, guys. This just signifies the fight. Your first step will be to find those trigger lines, large and synthetic. Draw a box from the lowest line of the large triggers to the highest line, whether it's large over synthetic, synthetic over large. This box represents where the market is most likely to pull back to. But you've got to give it something to bounce off of, which means that we're going to refine and go from the big box from the trigger lines and create the window of opportunity from the highest point of support inside of triggers to the lowest point of support inside of triggers. And this becomes where the market is most likely to continue. And the only thing left for you to do at this point is to activate a limit order right at the top of the window. Guys, this is your first 20 days with me, being able to pinpoint this entry. Once you can pinpoint this entry, guys, life is good. You have to manage it. You have to do something with that great entry. And great entries create very manageable trades because there's lower risk and higher profit potential. And your management plan is going to be the same as your entry, guys. You're going to create a plan suited to your needs. You're going to learn when to hold for bigger moves. You're going to understand when you got to get out quicker. But in the very beginning, if you allow your management plan to be just as mechanical as your entry plan, it takes all the stress out, guys. Your management plan for the brand new user, the KISS user, is nothing more than if-then. And everything is dependent 100% on your ability to enter the market where the market is most likely to continue so that you can put your stop where the market shouldn't go. And you're either going to get stopped out or the market's going to give you a reversal bar in the direction of your trend. And if it does, you're going to reduce your risk 2 ticks above that reversal bar, and you're going to sit on your hands, and it's either going to hit your target or it's going to hit your stop. And if it hits your target, guys, it's a $100 target. It is so stinking close because we're building confidence through the memory of success, because we're learning to trust the entries. Jen, why are you deleting your pictures? And then, guys, from here, you're either going to get stopped out, break even, you're going to take all the risk off of the trade, or it's going to go to your second target. And if it hits your second target, oh, thank you for that. It's okay, we'll work through it. But like Pete, the picture that you just posted in the room, I still can't see it. It's struggling. So Jen, are you Snagit or TechSmith? Oh, Mav is happy. What a cute dog. Guys, if it hits your second target, it's a $300 trade. So Jen, you're going to want to hit share link, and it's going to automatically post it to your clipboard, and then you'll be able to just come over and drop that link in the room. You'll never even see the link. Just paste in the room. You'll see a little pop-up that says that it's saved to your clipboard, and then just post it in the room like 8 seconds after you hit share link. Cool, cool. Guys, this management approach is super mechanical, and it's right here on the spreadsheet that I gave you guys, 100%. But once you're good at this, once you can take the fear out of it, you're going to understand when you can hold for bigger moves. You're going to start to recognize odds favorable momentum and clear paths, and you're going to say to yourself, oh my gosh, I can get more out of this trade. Let me hold for bigger moves. But in the beginning, guys, you're going to be real tempted. When it goes 3 ticks in the direction of your trade, you're going to be real tempted to reduce your risk. And it's like they have cameras. They're going to stop you out and run. You're going to be real tempted to put your stop just below resistance inside of favorable large triggers, and they're going to stop you out and run. You're going to be tempted to be scared of small triggers against you, but that's the loss of momentum that you need to get back to your area. It's still odds favorable. You're going to be tempted to get caught up in these fluctuations, to lose money, to give it back. So keep it mechanical in the beginning. And if you go through 20 days, guys, 20 trading days, learning to identify where the market is most likely to continue, learning to sit on your hands and let management play itself out rather than chasing the money and worrying about the money. By the end of that 30 days, through simplicity, guys, you're going to be in a great position to recognize trades that win more than they lose. You're going to be in a great position to be able to identify momentum, a clear path. You're going to have 1,000 pictures, and you're not going to miss these trades, and then your plan will grow. So are there any questions? I'm going to ask one more time about the high probability trend trade. Are there any questions about momentum? Are there any questions about terminations? Are there any questions about picking your entry point? I can't see your faces, guys. If you're confused, you got to tell me. Once you're a chart reader, you can go to that 50-50 look, guys. This is your second trade. This is the one that isn't a high probability trend trade. This is a trade that you can't say wins 70 to 80% of the time. But it is designed to optimize your chances of success if you follow this checklist. And the first thing is, let it be one area not broken, not 3 or 4 areas not broken, right? Don't make them work that hard to give you a maybe trade. It should be coming from a termination condition that reversed the market. You learn this with a high probability trend trade. It has to have odds favorable momentum on both charts. You learn this on the high probability trend trade. It can't have divergence. You learn this on the high probability trend trade. Divergence is the biggest killer of these 50-50 trades, guys. Not coming from a strong top or bottom is the biggest killer of these 50-50 trades. So management's going to be different as well. It's not a high probability trend trade. You have to be aggressive and use your chart reading. He's a client, Rob. I mean, that's the answer. He's a client. And Rob, I'm going to tell you right now, and all the love in the world to my brother, at your level, you're not going to learn shit watching him trade. Because he has a list of about 50 assumptions every trade he takes. Things that he doesn't write on the chart. Things that he sees that he doesn't discuss. And Rob, if you try to trade like John Novak, you're strapping yourself into Mario Andretti's race car and hoping you don't put it into a wall. But you will. And guys, this is why you have to run your race. This is why you have to focus on your plan. Siva's been around for about 19 years. Siva's one of the original clients. He's been with us forever. Most people can't even read Siva's charts. Siva still uses stuff that we taught 20 years ago. But if you look at Siva's charts, Rob, tell me something. Do you notice that it's the same trade every time? That's the part I want you. If you watch Siva, that's what I want you to get out of it. He does the same trade every time. He has the exact same rules every time. He has the exact same entries. He has the exact same exits. Nothing changes in his plan, not one bit. Siva follows rules. Guys, you're learning to follow rules. I'm going to show you something. Siva created this 15 years ago because he knew the importance of rules. Guys, print this out. Put it on your desktop. If he misses a good entry, he sits out for a minute because he knows that he's not following his rules. If he enters late, he sits out for 2 minutes. If he exits for no reason, it's 3 minutes. If he moves his stop arbitrarily, he sits out for 5 minutes. If he exits late, giving up profit, he sits out for 7 minutes. Trading against direction, trading into areas, trading against area and direction, guys. Rules should run your life. Advantages should run your life. And Rob, you're going to be tempted to see what other people are doing, and I'm cool with that, right? Learn something from everybody else. But if you're looking for other opportunities, if you're looking for more trades before you've mastered one trade, you're going to struggle. And I know this because I've done it myself, guys. I've done every mistake that you guys have ever tried to do. And I always go back to, and I'm going to do it, my last samurai picture, guys. Too many mind. You guys remember this from the movie? Too many mind. Mind the high probability trend trade. Mind the momentum trade. Mind the 50-50 trade. Get back up there. Mind the jump in trade. And what happens, son of a gun. And what happens is you look for everything and the only thing that you catch is the losers. The only thing you catch is the losers because you think you're taking a high probability trend trade, but it's really a momentum trade, and you're managing it like that rather than a high probability trend trade. So guys, keep it simple in the beginning. You'll be floored at the success that you find. This had the potential to break. Divergence kills it, as it does. This is a termination condition, guys. There's no trade to take here. Not that fit the rules. There's nothing I can do here. And I'm sitting down, and Pete, you're absolutely right. Guys, I've been with Nexgen for a little over 4 years. I consider myself to be a pretty advanced chart reader. I can look at a chart and I can knock out the advantages in a second. And I can recognize patterns at the drop of a hat. I am light years behind John Novak. And he points stuff out to me every day that floors me. I'm in a constant state of learning 4 years in, guys. You should be too. Let it be simple at first. So I'm going to take a break. I'm going to take 5 minutes. When I come back, we're going to start looking at charts, answering any questions that you guys have. Every chart that I look at, ladies and gentlemen, every chart that I look at, I'm just going to go back to on momentum, a clear path, and an entry area. And if you're not telling me why you're doing what you're doing, then that's as far as I'm going to go. I'm going to look at it and I'm going to say, man, this isn't a high probability trend trade. This isn't the best of the best. This isn't momentum, a clear path, and an entry area. We're going to work on being chart readers, guys. So I'll be back in 5 minutes. S&P doesn't have any rules met. Crude oil has odds favorable momentum and a clear path. It's got those split trigger looks. How do I decide? How do I decide? All right, guys, I'll be back in 5 minutes. I'll leave you with crude oil. Go stretch your legs. All right, guys, let's get back into it. Can you guys hear me? All right, very cool. Man, there's those split triggers, right? And sure enough, it didn't just bounce off the mid-band, it pushed down lower, tried to go to that second correction point. Guys, this is a pretty normal thing. I'm going to do something real quick, guys. I'm going to kill Discord real fast and bring it right back. You guys will still be able to hear me. It won't boot you from the room. But usually that reset speeds things up for me when it's dragging. And again, my apologies. I am struggling a little bit on my computer. I'm going to have to do some repairs this afternoon. I'll be back in 1 second. Coming back, guys. Hopefully you can still hear me. I'm not sure if you can or not. Doing the reboot on Discord. This makes it easier for me to follow the links. And again, my apologies. I am very much going to work on my computer this afternoon. My brother doesn't know it yet, but he's going to work on my computer this afternoon too. Muhaha. Pulling up my screen right now for you guys. Look at me being all techie. Man, I'm trying to. If you know me, you know I'm not a tech guy. There's nothing techie about me. I'm a dreamer. I'm very artsy-fartsy. All right, guys, so we're going to come through. I'm going to scroll up to the top, and we're going to start looking at the pictures that you guys have posted. The first one, and I think the most important one today, is this one right here. So let me get that up. Because Mav's a good boy. Yes, he is. For you guys that are new, this is one of the most painless ways to share with me the fact that you can post in the room, and I always appreciate this. Show me a picture of your dog. I love seeing pictures of your dogs. So, going up to the top of the room, it looks like Paul Flowers got us going in the middle of the night. Paul, you got to sleep. Oh, actually, you know what? Paul W. decided to post yesterday afternoon. And Paul Flowers, momentum, clear path, pull back to resistance inside of favorable large triggers, quick profits, out at support. Okay, so here's what I need from everybody. I don't know, John. You'd have to have Discord up. Pete, what I'm saying is that if the triggers represent where I expect price to correct to, when they're one on top of the other, well, it reduces that area, right? It takes some of the guesswork out. But if they're split apart, how on earth could I possibly know? Okay. And that's the idea behind favorable large triggers, guys. When they're one on top of the other, life gets pretty easy. When they separate, it creates challenges. Paul Flowers, this is perfect. This is everything that I look for. Everything that I look for in a trade. Momentum, clear path, and the large and synthetic are overlapping, and there's only one line inside, and you take that thing. Absolutely beautiful. Morgan, do you see how his small triggers are a full bar away? Yeah, it did. All right, guys, here is taking advantages. And I'm going to go through these quick, Paul, because we kind of already addressed them. Guys, odds favorable. Everything is up, not a clear path. No divergence, low risk entry, get paid. Odds favorable. Everything is up, not a clear path. No divergence, Low risk entry. Ugh. See, this one I don't like, Paul, because you gave yourself 2 ticks into trouble. 2 ticks into trouble, right? If you're gonna trade into trouble, give yourself some room. That's the lesson on this one. I missed that one. If you're gonna trade directly into a termination condition, guys, don't do it with 2 ticks before you get to the area that may hold. There it is again. So, Paul, I was praising you, and now I just got to tell you, if you're gonna trade into termination conditions, man, give yourself room to manage. They're termination conditions. They create bounces. You're banking on the idea that these areas create a retracement, and if you're trading directly into it, oh man, the likelihood goes down dramatically. Paul, this is where you got to sack up a little bit and get in at the area that gives you room to manage. Does that make sense? If you're going to break rules like that, dude, you got to have room to make money. Otherwise, it just doesn't even make sense to do it. Good job, though. There's always something to learn, guys. There is always something to learn. You could take the perfect trade, and there might be an opportunity to learn something that you weren't thinking of. And that's fun when that happens. All right, Miss Jen. Odds favorable, potential to break, no divergence, perfect entry, easy money. It doesn't get any easier than this, does it? Not a termination condition, Jen. Just a pivot. That's the only thing. Right? That's not a termination. That's nothing. That's weak triggers and a reversal from the middle of nowhere. That's okay, though. You had the best momentum ever, the potential to break, no divergence, strong triggers, tiny risk. Beautiful. Guys, this is how you take a medium probability trade. Take it from the area so you have room to get paid down at trouble. I love this trade, guys. That's how you take a 50-50. Perfect. Guys, if you're working on your 50-50 trades, you should be stealing this picture and putting it into your spreadsheet and saying, oh, this is the best of the best. This is how I do it. Low risk, because great entries create manageable trades. All right, let's see where we're at. Paul took the exact same trade, got it a little bit lower, exact same result. Paul, absolutely beautiful. Makes me happy when you're in cahoots with Jen. All right, Jonathan, you dropped about 4 in a row, so we're going to just open all of them. All right, no trade, no clear path, has odds favorable momentum. I'm not exactly sure where you're talking about. No clear path there. Potential to break here. All right, little chart reading going on. You jumped in, got out quick. No entry rules, right? Help me out, Jonathan. Odds favorable. You say it's clear path. Jonathan, am I missing it? Is that not a big blue fib? You have to be civil. Convicts. That's all right, Jen. We were the assholes that left the mother country. Let's go persecute people on different lands. Directly into a termination. Do you see it? Clear to the fib. It hit the fib. It's bouncing off of the fib. Do you see that? Like if I were teaching a class on termination conditions, Jonathan, this would be the absolute shining example of when my charts say no more shorts. price reaches an area, triggers are above it. Does that make sense? That was the most unclear path you could ever hope for. Same as it was here, same as it was here. That was the third hit. Give me a Y if that makes sense, Jonathan. And then it breaks, and then you have odds favorable. This was your entry right here at the area inside of favorable large triggers. That was your entry right there. Second divergence, smalls on the wrong side. You're trying to trade NASDAQ like you would trade crude oil. You can't do it. This says get the hell out of your NASDAQ trade. And this actually created a third divergence on mine that got me the hell out of the NASDAQ trade. But here's the one that I want to focus on. When it looks like this, Jonathan, your rules, if you're a high probability trend trader, say trade the pullback to resistance inside of favorable large triggers, which means that you had over $300 worth of profit to get down to the trouble spot. Great entries create manageable trades. Not only did you not trade from areas, you traded after two divergences with the small triggers on the wrong side of the large. And on the NASDAQ, you might as well just write a check to somebody. They're going to take your money like that. Ah, love it. Always want to see the dog picks, guys. The dog picks make me happy. And then to beat a dead horse, Jonathan, which one were we looking at? Right here. Pullback getting beat up on this one. Guys, and this isn't just for Jonathan, this is for everybody in the room. Jonathan talks about the clear path, right? He's talking about, what does trigs good mean? There are no bad triggers, right? None of them are robbing liquor stores or punching women. They're either strong or they're weak, right? The path is either clear or it's a term. And your rules for entry on the high probability trend trade aren't pullback. They are sell a pullback at an area inside of favorable large triggers. And guys, if you get in the habit of writing these darn rules on your chart, of committing them to memory, of stopping to hope to make money and start hoping to take the right trades, you're in this trade at 1550 right here at the pullback to the area inside of favorable large triggers, rather than getting in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars late, hoping that the market does what it's going to do. So guys, I say it every day, and I really, really mean it. Write your rules on your chart. Had a clear path. Not so great triggers is not a thing. So Jonathan, what are those triggers? They're weak, right? What does that mean? Anything can help me. Or anything, sorry, I saw help. Anything can happen. Anything can happen. And what happened? Anything. And 5-1, all red, smalls not outside, entered on a pullback. Not a pullback to an area inside of favorable. That fib wasn't there yet. Trade failed because rules not met. Trigs on both charts not in correct position. Thought it would be a quick, manageable trade. Trigs taught me a lesson. Also should have moved stop to 4 ticks, where the market shouldn't go. So Jonathan, I love the annotation on this chart, because what it tells me, and guys, this is huge, and this is a pretty common thing, is if you take the time to annotate a chart with your rules, do you know what that means more often than not, guys? It means that you're following your rules because you're proud. You're proud that you can write your rules on the chart. If you skip taking the picture, if you omit one of your rules in the annotation, it's actually a very positive thing, because it means that you know your rules, and it means that you know that you're breaking your rules. And I hope that makes sense. Guys, get in the habit every time you take a trade, every time you pull the trigger, every time you enter the market. I don't care what kind of trade it is. Write your rules. I don't care if your rules are strong triggers, no terminations, pull back to an area inside of favorable large triggers. I don't care if your rules are jump the F in and then get out with a loss of momentum. It doesn't matter. Write your rules on the chart, because what we're trying to do right now is keep it repeatable. We're trying to make it so we can do the exact same thing every time, because it produces a statistical advantage. Pete putting on a clinic this morning. Termination that reverses the market, that creates odds favorable momentum. You chose not to take the one directly into a termination. You took the one with the potential to break. Absolutely beautiful. You exit a contract on accident and you get out with all that momentum at the fib. Pete, this is freaking outstanding. Termination means that this is more likely to break. Great entries create manageable trades, and you ride momentum all the way up. You knew exactly where the market was likely to go. Pete, twice a day, you'll never want for anything in your life. And on this one, trigger strong and up, no clear path. Your chart reading lets you know exactly what the challenge is. You decide to take it anyway, directly into a termination condition with a couple divergences. Super low risk, wrong side of the correction, way above the next correction. This is a super low probability trade, Pete. And it works out. But between two divergences from a fib with the large triggers this far away, oh my gosh, dude. You pulled one over on them, and the market's going to let you do this every now and then so that you do it every time so they can take your money. He's on vacation this week, Paul. Does that make sense, Pete? Trade any way you want to trade, but this one is there's some struggles there. And guys, just because I have to point out struggles to an educational room doesn't mean that Pete sees these as struggles. This may be perfect for Pete. Guys, excuse me just 1 second. All your pictures of dogs make mine need to go out. 1 second, please. Sorry, guys. Hey, you're going to spend class in the cave. You're going to spend class in your crate if you don't fucking stop this. Do you understand? I apologize for that, guys. Pete, with this much momentum, and guys, let me go to the positives too, because I always have to point out, right? Oh, it's a termination. There's all these divergences. But I also have to point out that, guys, momentum can make things happen where it wouldn't normally happen. Try that same move with weak triggers, probably going to get slaughtered. But with that level of momentum, Pete knows that he has a fighting chance. Pete knows that it's hard to stop a market that's moving that fast. And sometimes, as you grow with the software, you take chances based on the amount of momentum that your large chart's given you. And I'm not saying break rules, but I'm saying that it's been known to happen. All right, Claire. I'm excited to see pictures. Are these weak triggers or strong triggers? Smalls are inside large, but they keep breaking support. Great question. Oh, Clara. Sorry, I said Claire. All right, so Clara, don't confuse momentum with terminations, and that's why they're separate. And when we talk about momentum, strong triggers are always the separation. Just because they break, and Pete put the word in there, anything can happen, right? Anything could happen. And that one didn't really break support. That one bounced right off of it. Are you with me, Clara? So everything is down and strong triggers get going, right? And it breaks areas, and there's still momentum and it breaks an area, and one line's out and it breaks an area. And then it seems to break areas without that odds favorable momentum. Do you see how the small trigger is riding the line there? I want to make sure you see that. So when I have 30 bars in a direction, when I have 3-4 broken areas, what happens is you end up in this look that's just a strong trending market. And a strong trending market typically won't show you odds favorable momentum, but because it continuously goes down without a reversal bar, 30 plus bars, because it's breaking through areas, a strong trending market isn't going to show momentum, but this is exactly what it looks like in a strong trending market. And what a lot of people will say, there's plans in place that when I have a strong trending market and a clear path, and that's the key, is you do need the clear path, well, I'll sell that midband until it stops working. Because eventually, even a strong trending market will stop working. But momentum is this look right here, and it has absolutely nothing to do with whether or not areas break. It's a separate entity. It starts. Momentum is capable of breaking areas, but you've always got to go through that process. If price reaches and the triggers haven't broken, it's always the best bet to wait for them to clear. Does that make sense? But what you did is you pointed out perfectly a strong trending market. Nice, you're welcome. Well, tails are pullbacks on the small chart. Does that make sense, Clara? So you're not looking for tails to enter. You're looking for pullbacks to areas inside of favorable large triggers. So what you're asking me is your large chart look is perfect, right? And you're saying, hey, Mark, what if my rules aren't met for entry? How do I get paid? Is that fair? You'd have to create brand new rules in the moment and break them. And Clara, this goes back to the idea, and this is what frustrates new users, is that not every penny in the market is your money. Not every move is your move. Not every spike for 50 points gives you a rules-based entry. And my brother always told the analogy, because Novak's stinking analogies, is if you walk into the bank and you yell, "Give me all the money," you're a bank robber, and you're probably going to get tased and hogtied, right? But if you walk into the bank and you say, "Hey, may I have my money, please? May I have the money that fits my rules, that's a part of my plan?" Well, then you typically walk out with the money. And Clara, it's frustrating sometimes when the market moves without an entry that fits your rules. And it's frustrating sometimes when you feel like 40 minutes into your day you haven't made $1,000 because you're trying to make money. And sometimes, Clara, and oh, it's so hard for people. Sometimes you just have to say, it's not my money. That's just not my money. I couldn't find an entry that fit my rules. It's just not my money. Does that make sense? And that's rarely the answer. That's rarely the answer that people want to hear. But why do we trade rules, right? Why are we looking for those pullbacks? Because when it is my money, it wins more than it loses. And when it is my money, there's a statistical advantage. And when it is my money, I know how to manage it. And when it is my money, I can create expectations based on the momentum, the clear path in the entry area that sets me up for success. But here's the thing, Clara, and I want to say this. Not my money for the new user is really not my money yet, because you'll be floored at what you can find. And let's go to the ES real quick. Whoops, let's not, because my Ninja Trader just shut down on me. What you'll find is that maybe there's an opportunity using a momentum style trade, or maybe there's an opportunity with an HVA trade, or maybe there's an opportunity in here. I know, right? To catch what it is you're looking for, to be able to capitalize on that one. And Clara, the better you get at reading your indicators and the more time you spend recognizing patterns and looks, there's a gentleman in the room that on this particular look would have entered the market when the back of this bar cleared the fib, and he just would have jumped in and rode momentum down to a $110 profit. But it was all of his study on the high probability trend trade, recognizing the momentum, understanding that the path is clear, that set him up to be able to take these trades. So that was pretty long-winded to say that there just may not have been a high probability trend trade there. And you just may not have rules to catch what was available. And I know that's not the answer that you guys want all the time. Sometimes you don't want to hear follow your rules. You want to hear, hey, here's how you break your rules. And guys, that would be irresponsible for me to tell you to trade without statistical advantage. Because the goal is to win. And not just win once, guys, but to win repeatedly, to win every day, to win more than you lose. The goal of trading is to get paid. The goal of trading isn't to be active all the time. Pete, weak triggers reverse the market. Divergence kind of gives you that giddy up. You're trading directly into a termination again, but you're doing it with a super low risk entry. And you're getting out of trouble. And Pete, if you're going to break a rule, you're doing it like a freaking artist. Momentum can help you fudge rules a little bit. Having a beautiful entry with low risk can help you fudge rules a little bit. Notice that there's absolutely no divergence on the small chart, that it's odds favorable momentum, and he's committed to this area as his entry. And Pete, correct me if I'm wrong, you weren't willing to hold a stop all the way down to here. You probably had it right outside of those large triggers, making it a relatively low risk attempt going into that area. Beautiful. This is where experience comes in. Oh, Clara, you're stuck with me at this point. So as many charts as you're willing to post is as many private sessions with me as you get. So I love it. Keep them coming. Keep them coming. And I'm telling you guys, I won't always give you the answers that you want. But I'll give you the answers that are more likely to bring you success long term. That's a pretty chart. Don't have any... Oh, that was your test chart, Jonathan. That was your test chart. I was like, hey, there's no writing on it. But I remember. That was your test. It takes me a second sometimes. All right, Paul. 50-50, right? Termination, odds favorable, potential to break, divergence prints. And you decided not to take it, and thank goodness, because sure enough, it did go down, right? Paul, great job following your rules. And then Adamos FX, we talked about this one, right? When a termination reverses the market, when you have odds favorable, when you take a low risk entry, you can still find ways to capitalize. And if you need further on that, let me know. I think we covered it pretty good at the time. And then Jonathan, I don't know what you're doing to me, my friend. Jonathan's like, Mark, I'm just going to keep giving you pictures. Let's see where we're at in these pictures. You can hear the clicking, clickety, 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 clickety of my mouse. Morgan. Let's see what Morgan did. He didn't apologize when he posted it, so it's got to be a good one. Good top, pretty close. Large triggers rolled, they did. Odds favorable, I agree. Overlapping triggers makes it less risky. You understand the wall was on the other side of the triggers. Out at trouble, no divergence. All right, annotate it. What are you wondering, Jonathan? I don't even know what chart that is. I can't see what time frame it is. We'll go back to it. So Morgan says, with every trigger below resistance, resistance is likely to hold. Morgan says price is likely to pull back to the large and the synthetic. So he combines the two and says, I'll just go short right below it. I know where my stop goes, and I'll get out when I hit something that could create trouble. I like it, Morgan. Well done. Is this a large chart, Jonathan? It is. That's a termination that took you to the mid-band. When the mid-band was hit, the large triggers were a full bar away. So the mid-band was a termination. It pulled all the way back to support. All the triggers remained above. That's a termination. When it reverses the market, it becomes a strong bottom. And that is directly into a termination. But it cleared this fib, but not this one. Does that make sense, Jonathan? Yeah, that's definitely a strong bottom. And honestly, Jonathan, this was a strong bottom right up to the termination. And then when this reversed the market, this became a strong top right to the termination. And then when this reversed the market, it became a strong bottom. And this is that rule number 2, keeping you out of nonsense. Good stuff, Jonathan. It looks like you read it the way you needed to read it. All right, Jen. And I'm going to get rid of the old pictures too, just so that things don't chug. Jen says, weak triggers, termination, gap theory, smalls are up, larger down, smalls are below, larger above. Jen says, hell, I can't do anything with this. This is nonsense. That's not my money. I'm going to sit on my hands. I like it. Paul says everything is going up. He has a pattern that he likes. It's a momentum style trade, guys. Momentum on the large chart, momentum on the small chart, momentum on the range chart. Paul takes a little pattern over here that he's familiar with to catch momentum. So Clara, with a little bit of experience and some time reading charts, you might embrace something like this that Paul does. He didn't have any tails, but he traded just a little momentum stab look and was able to capitalize. And it takes a little bit to get good at that one. And it takes a little bit of chart reading and throwing some different factors together. So keep focusing on those chart reads and you'll be amazed at what you pull off. And then Pete, you knew that trading into termination conditions was going to run out of luck for you eventually, right? You knew that there had to be a time where trading directly into fibs was going to suck. You found it. You found it. And that goes back to the idea, guys, is there is a way to do it with a lot of advantages, right? No, I love it. Pete, divergences from the fib for me is an absolute positively no more trades into the area. No divergence, I can get 100% on board with taking a shot. Do you see the difference between the two? Same momentum, right? Exact same momentum, exact same termination. One didn't have divergence and strong triggers. One had 2 divergences and weak triggers. And these are the little nuances that you're going to recognize at a moment's notice. And you'll say, hell yeah, all day. Can't make me, not going to do it. And that's how plans evolve, guys. But it's doing exactly what Pete did. And Pete said, you got to post the losers too. Why? Because there may be something subtle. Like, hey, did you notice the difference on the entries? And guys, we don't always notice it at the time when it happens. We don't always notice it in the heat of battle. That's why going back and studying your charts is so imperative. Because if you go back to a trade with absolutely no emotion in it, you're a lot more are a lot less opinionated. All right, Chris H says, when I have strong triggers and a clear path and everything is up, I'm just going to jump in. And that's what you did, right? So Chris, here's my question. What happened next? What happened next? What was the result of that trade? And the only reason I ask that, guys, is because there may have been a management opportunity in there. Because if Chris H asks himself, what kind of trade is this? Well, this is a jump the hell in because of momentum trade. That look right there, guys, that close on the wrong side is a loss of momentum. How did you manage it, Chris? That's my only question. And you don't even have to tell me. But if you're just going to jump into the market, you better have rules for exit that are a little more aggressive. Jonathan, was this you? This was you. Your charts look different. No. Jonathan, is this you? Does that make sense, Chris? I didn't think so. That doesn't look like your charts. Who did I just click on? Oh, I have two. This is Jonathan 0981. Jonathan 0981. Welcome to the room. Different Jonathan. Are you in here? There you are. Awesome. Let's take a look at it. So you had a weak bottom. Perfect read. You had odds favorable momentum. Perfect read. You hadn't reached the area. Perfect read. You don't quite make your mid-band, right? Got in early, said I'm not going to miss it. And you knew right where trouble was, and you exited. Jonathan 0981, I don't know if you're listening. I love the way you did this. I love the way you did this. And my only question, and I always do this, is if you're going to jump in early, do you know where your stop goes? And are you willing to ride it out if it pulls back to the next, to the bottom of the triggers? That's the only question. And getting out of trouble, beautiful. Really well done. I just saw Jonathan and stopped reading. Great job, man. And then Jen. Jen says odds favorable, not quite there. In at the area, mid-band inside of favorable large triggers, and got out when it reached trouble. Jen, you got in at the mid-band? Can we turn this into a lesson for everybody on split triggers? You don't mind, do you? You know I'm going to do it anyway, though, right? So check it out, guys. And this is where I think understanding the whole logic behind pulling back to triggers comes into play. So there's two spots where price may correct to. There's the large triggers and there's the synthetic triggers, right? And Jen is forced with this thing where she's got to say, dang it, Mark, my only area is hovering in between the two. Is everybody with me so far? So it's on the wrong side of the large triggers, which is problematic, right? But it's above the synth. And this is key, guys, because if price comes through the large triggers, where do we expect it to go? Probably down to those synthetic triggers. It missed them by a tick. Is everybody with me on the logic so far? If I use triggers as a correction point, there's two potential correction points, and my stop has to go on the other side of the correction point. So what Jen is saying, and I'm assuming, Jen, that you're saying this because you're brilliant despite the whole convict thing, is that if price hits this mid-band, it still might correct, right? But this is the only spot for a bounce before the correction point. There's no spots for a bounce in the correction point, which means that I'll get in here. I'm fully aware that it may correct, But if it goes beyond those synthetics, I'm going to get the hell out. So you used your chart read to take advantage of an imperfect entry when you had the perfect conditions on the large chart. Does that sound like it makes sense to anybody? When you understand that price may correct, you know how to put your stop in place, guys. And if my line is above a correction point, I'm cool. Give it to me. I know where my stop goes. But if it's on the wrong side of the correction point, how do I know when it's going to stop? And that's one of the things that you get with why we talk about entries the way we do. And let me go to, I want to go to a window of opportunity just to kind of illustrate a little bit more if I could. Because once you start thinking about them in terms of correction points, the triggers, I'm pulling up a picture. I think I'm pulling up a picture. Yeah, I am. Okay. Let me pull this over. When they're in or above the correction point, management becomes easy. But when they're on the wrong side of that correction point, who knows? It may go all the way down to God knows where. So Jen, the way you did that, I think is great. That understanding of correction points allows you to capitalize when it's floating in the middle and still have an intelligent stop. So I hope that that was a little helpful for everybody, because Jen didn't realize that she was teaching class today, but that's a good look that set me up to look smart. So thanks for the assist on that one. And what's cool, guys, is when you start thinking about things and you have to go through the same process in your brain 1,000 times, it takes you absolutely no time to figure that out. So when synthetic triggers are flat, does it mean we're going sideways, no direction? Chris H., great question. Let's answer it like this. When they're wide, and let's go back to odds favorable momentum. When they're wide, angled in the direction of the trend, right? That is strength. That's awesome. What happens when there's a trend change? They flatten and pinch. So if they're completely flat, doesn't it mean that there's the potential for a pinch and roll? You'll have to get more information. But there is no strength in flat triggers. I think someone posted in the room the other day, there's no boogie in flat triggers. Strong triggers come from them being wide and angled in the direction of the trend. Flat triggers are just void of momentum. And when I have flat triggers, let me see if I can find an example. When I have flat triggers in this transition phase, Chris, the only thing I can really rely on is the immediate indicator, the faster of the two moving averages, and kind of hope that it gives me some insight on what's going to happen. The large triggers are still down, but the small triggers are up fast. It helps me find that little transition. Let's see if we can find it. Here they're flat, right? And I don't really know, Chris. I don't know if this resistance is going to hold with the triggers below it, and they're flat. But my immediate momentum indicator says, hey, we're at least going up for the moment with some strength. And that's why we don't fight those small triggers. So good stuff, man. Great question. Now I have the potential to break, and I do have momentum, and I do have an area inside of triggers, but I did have divergence on a 50-50. What do you guys think? Do we trade it or not trade it? Momentum, potential to break, but I have divergence right from a freaking 1-to-1. Paul's already in. My plan says that if I have divergence from a 1-to-1, I'm going to sit on my hands and wait. Doesn't mean it won't work. My plan also says that it needs to come from a strong top or bottom. I never try to put juju on anybody's trade, but that one doesn't fit my plan. I like to always ask you guys what your plan is, though. All right. And Adamos, you are the phantom trader. I still can't see your name. I love it. I saw it the other day and I couldn't figure it out. Same trade. Beautiful. Odds favorable, clear path, if you understand correction points, you can get in at the mid-band. So the only question is what got you out? Exit set at 81.49 and 81.52. So I just admitted to using Discord light theme. I don't know what that means, but I will. I don't care. So Adamos, did you catch the lesson on gens? I don't think so. It might be. I don't know. I love your entry. There was no reason to get out of this trade though. Because the same thing that got you in here, nothing changed. You're still at a mid-band. You're still in the correction. And this is where I think that KISS plan pays huge dividends for you guys in the beginning. Yeah, it probably is, Morgan. It's probably white. I'm old. My eyes are tired. It's easier to read. This is where that very pragmatic works, right? Because you're in at 38 and it goes to 48, and that's $100. Get knocked out, break even. Totally cool, right? Re-enter if you need to. But nothing changed in that trade. Your small triggers stayed up. Your large triggers stayed up. Your synthetics didn't do anything. You still didn't reach an area. That's just the I'm not willing to risk it anymore look, right? And they know where this is, and they'll come back and hit it every time just to piss you off. All right, Chris, let's make this bigger. Odds favorable, clear path. Divergence doesn't scare me on odds favorable and a clear path. I'll have to check it out and see. I don't think I've ever messed with it. So Chris, let's talk about rules real quick. Are you with me in here? And this is for everybody. So Chris, if I have odds favorable momentum, if I have a clear path, right? There's only one thing that keeps me out of a high probability trend trade, Chris, and that's 3 divergences on the small chart. But here's the deal. And this is the part that I want you guys to recognize that is so imperative. Is Chris, you didn't take the high probability trend trade, did you? You jumped in. You just jumped into the market. No reversal bar, nothing. Just you know what? Look at the momentum and the clear path. I'm going to get into the market. Is that fair? This isn't a high probability trend trade because a high probability trend trade comes from this area inside of favorable large triggers and makes life easy. And then Chris, I don't disagree with just jumping in with momentum, right? But here's the deal. As long as price is left of the small triggers, that jump in is going to keep going. Does that make sense? Look, and it does it too. As long as price stays left of those triggers, it doesn't go up, right? Once it gets to the wrong side of those triggers, there's your retracement. Once it gets to the wrong side of those triggers, there's your retracement. So what does this do? If I am going to incorporate a jump in play, if I'm going to jump in the market, I need to do it on the left side of the triggers. If it closes on the right side of the triggers, not correct side, but the right side, I have to say momentum is gone, and it's just silly to stay in a momentum trade with no momentum. Does that make sense? But here's the other part, and you're going to dig this, is when a momentum trade fails in my large chart, is screaming down with no terms, it's probably going to just turn into a trend trade. And that's exactly what happened. So if you're gonna jump in, right? I love it. Clear path, jump in. These aren't home run trades. These are base hits. And the one man in this room that takes these better than anybody that I've seen doesn't hold for the duration, but rather gets into this momentum trade because it's nothing but momentum. Whoops, get off of there. Because there's nothing going for it other than momentum and a clear path, right? I don't expect it to hold forever. He'll literally jump in, jump out, and collect $110 per contract and wait for the next trade. It's because you're putting the pressure on yourself to win, Chris. On simulator, you don't care if you lose, right? Who cares? Who cares if I lose? But the human brain, and especially the trader's brain, it thinks that the only important thing is wins. The only thing important is wins, right? It's all about the wins. It's all about the money. It's all about this. And there's two things. So, execution of rules means that I'm trading a pattern that has been proven. You have to prove it to win more than it loses, right? This is what I teach every day, guys. I teach a pattern that has been proven to win more than it loses. So, and this is hard. You have to shift your brain to not focus on the result, but rather the execution of the rules. And I can't spell this morning. And the reason that you have to do that, because if the only thing that you're worried about is momentum, a clear path, and the correct entry, guys, the results are going to take care of themselves because you're trading a pattern that wins more than it loses. But one of the challenges that happens is that, and this goes back to Clara, what you were talking about, right about here where Chris jumped in, his brain says, oh shit, Chris, you're not getting paid. All this move down and you're not getting paid. All this short movement and you don't have a penny to show for it. And the fear of missing out kicks in. But Chris, if you get to the point to where you say, I'm going to wait for those pullback to areas inside of favorable large triggers. What did this market do after that? Did it work out? It doesn't guarantee a win, but what it does is it gives you the opportunity, right? And you're in this trade and your stop's in the right spot. And I don't see any reason not to be in the trade. Right? So you're saying, should I have not been in the trade? Divergence isn't a killer there. Guys, that turned into a huge lesson off of one picture. Focus on the execution. But Chris, this is going to save your bacon. Jumping in on the wrong side of the small triggers is my key to wait for the trend trade. And if I jump in up here, I'm going to get paid quick. I'm going to get paid fast because I know that patterns repeat themselves and the trend trade is probably coming. Great stuff, dude. Thanks for posting. It's good to have you posting in the room. Most people that don't post in the room don't want to show what they consider to be a weakness, and the people that post in the room are going to get to where they want to be. All right. I clicked on it, then I forgot to look and see who it is. Steve Diego. Steve Diego says, second higher divergence, weak bottom, but there is momentum and not a clear path. But since there, divergence printed after entry would have negated the trade. All right. But you stayed in it anyway. Stops in the right spot. Quick profits. And you got stopped out at support inside of triggers. That's okay. You didn't miss it, Chris. It just wasn't yours. Anytime I say I missed it, I try to make up for what I think I missed. Right? Strike two, you swing harder. It just wasn't yours, man. You weren't in front of it. Guys, if I have to go to the bathroom and the market sets up a perfect trend trade, I didn't miss it. I just wasn't there. It's not mine. One thing you can do, Steve Diego, is that if divergence is a deal breaker for you, wait and see if it prints. I don't know. Show me a picture, Adamo. Let's find out. Show me a picture, and I want you to do two things for me. Did price reach an area? Where are the triggers? And then we'll go back together with it. Steve Diego, I like the quick exit. I love the stop placement. Second divergence is struggling. I hate getting out at areas inside of triggers. These are the ones where I probably would have just taken them off right here. Or at least taken one off at the pink line. And then had the rule that if a divergence prints, I'll exit at divergence and just got you a couple. Break even's fine though. Not a high probability trend trade. But trading from areas creates advantages. All right, Jen, here's an example of when it blew through your mid-band and hit the synthetics, right? You know that there's a correction point. Thank you for sharing that. You know there's a correction point. And once you understand that, good stop. You hope I like this one. Jonathan, it doesn't matter if I like it or not. You jump into the trade. Right? If you're in, this is your momentum trade right here, Jonathan. This is the one that is the easiest, best of the best. And you could have rode that thing all the way up. And then you jump in, right? That's cool. You're jumping in on the right side. When momentum goes away, it's so hard to see what you did here. You get stopped out. And then I'm assuming you just jumped right back in. Not sure why. And off it goes. And I like that you rode the momentum. Strong bottom, odds favorable, pull back. There are no areas. You didn't trade areas, not at all. Then you re-entered and there was no trouble though. What's the trouble that you see, Jonathan? There is zero trouble. It is wide freaking open and strong. Love the strong bottom. Momentum is insane. Guys, there's two types of trades. For you guys that like to just jump in. No, there is no fib from divergence. There's no fib. There's nothing there. It didn't reach it, Jonathan. That's a target. But let me show you something, guys. Strong bottom, okay? This is the way Nexgen teaches it. And you guys love to just... I'm going to rename this one. This is the jump the in trade. That's all it is. Feel free to work through the acronym, right? This is you guys. This is something you guys created. This isn't Nexgen. I want you to know that. Nexgen teaches that when there's a strong bottom, when I have odds favorable momentum off that strong bottom, when the small triggers break through a 1-to-1 and price snaps back, guys, this is the trade that Nexgen teaches. And it gets you in $300 sooner. It gets you in $300 sooner, guys. And then you exit with the loss of momentum and you wait for a trend trade. This is what Nexgen teaches, guys. This is the one that has typically 3 or 4 ticks of risk on it. Not some unnamed, has to be where the market shouldn't go all the way down here trade. And I get that you guys are always going to jump into trades, and there's nothing that I can do about it, and I'm not going to try to stop you. But I'm going to encourage you, if you're going to take the JTFI trade, you better have some management in place. And to jump back in on the wrong side of these small triggers is freaking financial suicide. Why would you do that? With this look, with divergence on the wrong side, isn't it more likely than not to come down and hit a mid-band? Sometimes it doesn't. Sometimes it doesn't. I love manageable trades. So for me, Chris H., my stop's on the reversal bar marker. How come? Because if I get a reversal bar, I have a close on the wrong side, which means my momentum's gone, which means I am literally 3 to 5 ticks of risk, right? I don't have momentum here, so that's not a look. And Adamos, why didn't you show me the ES? You were asking about it. I don't have my ES up. That's why I asked you to show me the picture. So Jonathan, I like the idea, but as long as you're entering on the wrong side of those trades, it's not a momentum trade, which means that you're trading on hope. Paul, 50-50, one divergence, in at the area inside of support. Your risk is virtually nothing. Calculated risks. Miss Adriana. And then Adamos, please show me that. Okay, cool. I want to see. If you're going to jump in, get out when momentum is over. Nicely done, Adriana. Guys, I'm not saying that you have to never jump in. Adriana, was a reversal bar? Your stop placement here, was it behind the triggers? Because it's just a jump in. That's all it is. But you held the momentum beautifully. You're on the scooter. I like it. It's nice, Adriana. And then, is it a clear path? Definitely not. So Adamos, small triggers and long triggers break yellow lines. Entered on the pullback to large trigger. Right on. On which trade, Steve? Where was yours? Steve, which one are we talking about, brother? I want to make sure that I'm answering for the right chart. You're on delay there a little bit. Let me open up yours. We're talking about your chart? Well, that's what I'm making sure. All right, so, well, I know, but we've talked about 6 charts since, so I want to make sure that you weren't asking about someone else's chart. I've slept. So let's look at it. You're trading the NASDAQ. Pink 1-to-1's on a NASDAQ or a termination condition. So you're trading directly into a termination condition. You're 50-50 on this termination condition. And Adamos, this answers your question. Divergence highs. If price on the large chart reaches it and the triggers don't break it, it's not a clear path. It's very much a termination condition. Termination conditions happen on the large chart. So if you enter here, Steve, there's your final line. There's your second correction point. You have to make a decision, because if you put your stop on the other side of the large triggers, you get stopped out. If you put it on the other side of The synthetic triggers, you have a huge... Now, we'll go through it. Adamos, I'm going to back up and we're going to do a termination condition lesson. Cool? Give me just 1 second. It's not the bars, it's the triggers. So strong triggers, it cleared divergence, it didn't. It's 50-50, right? So it's areas inside of favorable large triggers. That's it. So whether it's the mid band or the fib or the 1-to-1, Steve, either one, doesn't matter. Who cares? What you're doing is you're saying, I'm going to make sure it doesn't miss me, right? The only thing on these trades, Steve, is you have to understand, especially trading into these 1-to-1s on a 50-50, that it may pull lower. It may go back to those large triggers. That's it. So there's two ways to take a trade like this. You either get in with a huge amount of risk initially, or you wait for the reversal bar, which for me personally, on the NASDAQ with a 10-2, that is a hard and fast rule for me, 100%. That is a hard and fast rule for me. If there's divergence on the high, on the NASDAQ, I insist on a reversal bar. I don't care how many areas are inside of favorable large triggers. I insist on a reversal bar. That's my own personal rule. So for me, the entry is right here. The first exit is right here. Divergence is a reason to exit. If I choose to enter again, it's right here on the reversal bar to take the second run. Does that make sense? This is a hard and fast rule for me because I've studied it and I've taken an awful lot of pictures, and this kills a trade more than it doesn't on the NASDAQ. It's a NASDAQ thing, guys. You're welcome, Steve. I appreciate you posting so we could get a lesson here. Pete, 50-50. You pull back to the area, you get out of trouble. Divergence from a fib, man, it's scary. Or divergence from a 1-to-1 is scary. You knew where your stop had to go, right? At this point, my risk is much, much lower. I'm not sure why you're going to buy again down here. Nice trade, Pete. And then Joel, that was perfect, right? And you just weren't there, so you didn't miss it. Beautiful. Odds favorable, clear path, right to support inside of favorable large triggers. Absolutely beautiful, Joel. What a great setup. All right, quick termination condition lesson, guys. And I'm going to go to the live market for it. No, I'm not, because I'm killing things here. All right, so I'm going to go to my termination conditions. And I've got pictures for you guys. My computer is an absolute anchor right now, guys. I apologize. I will have it fixed this afternoon. So when we're talking about termination conditions, Adamos, you ask the question, my friend, you get the lesson. Let me see if I can find, here we go. So termination conditions at high, we're going to do a couple things. I'm going to pull up a picture and we're going to talk about a few different things. But I'm also going to go back to the rules, and I'm going to go back to the actual, what's up, Mav? I'm going to go back to the actual trading guide and go to the rules. And we're going to talk about a couple different things in tops and bottoms. And I think that the most important thing that I want to talk about with tops and bottoms is understanding why we have them, why we talk about these termination conditions. And it's because when you see these lines on a large chart, these are where the people that are in control are making decisions. And guys, that's why we see the market reverse from areas all day long. And that's why we see these fibs hold, and why we see these yellow 1-to-1s hold, and why we see these divergence highs and lows hold. Because the divergence high is showing me where there was a loss of momentum, and it's literally a line in the sand that's created by the sellers that say, buyers, go to hell, we're not letting you go any further. And these lines in the sand, guys, they're powerful. They can stop the market. But these areas are where decisions are made. And that's the first thing that I want you guys to recognize, is that the people that are in control might be making a decision at this area. They might enter, they might exit. Buyers and sellers might fight. The people that have more moving power than us are going to have some sort of reaction more often than not. So, Adamos, the first thing in identifying a termination condition is allowing price to reach the area. So these are going to be termination conditions at a high. The market is coming up and the market goes down, and this creates a pivot. It's just an up and down. If there's a loss of momentum, guys, this means that the sellers literally stole the momentum from the buyers. And they pushed them down and they said, no buyers, no more right at this point. But the thing is, ladies and gentlemen, we don't know about this pink line until the third bar. So these losses of momentum are not termination conditions. Price didn't reach them. Price actually creates them. But when price reaches a divergence high, what they've done is they've reached that line in the sand. And this is such a common one that I made this for somebody one day. So anytime the market has a divergence at a high or a low, that line represents a very specific point where not only could the in-control force, like the buyers pushing up or the sellers pushing down, not push any further in their direction, but they also lost momentum. So not only could the buyers not go up anymore, let me find them at high. Not only could the buyers not go up anymore, but the sellers stole their momentum, those jerks. And when the buyers go, oh yeah, sellers, we're going up. When they reach that line, guys, this is where the sellers decide whether or not they're going to unload and push down. And Adamos, they did, didn't they? And this is why termination conditions have made their way, and why divergence highs and lows have made their way into termination conditions. But the recipe is always the same. If price reaches a divergence high and the triggers remain below, not the price bars, the triggers remain below the divergence high, it's a termination condition. If price reaches resistance and the triggers remain below, it's a termination condition. If price reaches yellow 1-to-1s and the triggers remain below, it's a termination condition. And I want you to see this. This termination condition pushes it all the way back to Fibonacci support. When it reaches Fibonacci support, all the triggers are above. I still can't go short. 90% of my day is spent reading indicators. And these happen at highs. Let me give you the picture. And Adamos, that's why I was saying, if you go through it in your head every day, did price reach an area? Where are my triggers? Did price reach an area? Where are my triggers? And then we just turn the tables. Did price reach an area? Where are my triggers? What happens is you never trade into these termination conditions. You never hope that these areas break as a new user. You simply say that this has the power to reverse the market. It could reverse the market. It might reverse the market. I don't know if it's going to reverse the market. I'm going to choose not to take that trade. And then props for coming back and saying that was in fact a termination condition, wasn't it? It was not a clear path. Pretty cool, isn't it? That you guys know about these areas before we ever get to them, that you understand completely that they may reverse the market, and you just don't have to trade into them. Jen, it didn't reach the fib, right? You had odds favorable momentum. It's directly into support. The triggers don't match. Jen's like, hell, I don't know what to do. No worries. And Adamos, I promise you, every day you're going to have an aha moment that you come to this class and ask a question. Every day that you post a picture, it's going to get better. Always. Steve, thanks for being here, man. 35th wedding anniversary. Congratulations, man. That's awesome. I'm a decade behind you. Congrats, dude. That's amazing. Go have fun. Do me a favor, be either too worn out or hung over to trade in the morning. And I'll see you on Thursday. That's awesome. Chris, you're at 35 too? Congrats, brother. I'm only at 26 this year. Jen, did you just not take a trade here? Did you say I can't go short, but I can't go long, and there's just nothing to do, and I love that. That's hard to do. But I'm still calculating. But right now it looks like I've got odds favorable. It might be a 50-50. No divergence, pulling back to resistance inside of favorable large triggers. We'll see what happens when my charts are done calculating. Yeah, Paul W., I'm with you. Next month is 26 years for me. Guys, we made it through all the pictures. Good job. Did we miss a lesson that somebody needed, though? Did I miss a picture? I don't think I missed a picture. What do we think, guys? 50-50. Not a good top. No divergence. Who's going short? And who's saying if it goes 1, 2, 3, 4 ticks above these, I don't want it. Not a clear path. Didn't quite hit the next fib. Not really a good top. Do you guys see how you can do this? Strong triggers, no divergence. Maybe you get in at the top. Not high probability though. 9 years into dating. Whew. You're going to do it in August, Morgan? You know, I have an aunt that was with her. They got married recently for legal reasons. She was with him for 40 years, 45 years. For 45 years before they got married. It's just a piece of paper. I like that piece of paper, go. Guys, the KISS plan says that I need to take profits at my first trouble. My $100 is right here. My $200 is right here. And if I get a reversal bar, I have to reduce risk. Oh, I bet. Especially if you guys haven't made babies. I'm sure they are. That's okay. One of the great things about this classroom, guys, is it starts out as this intimidating place where you're like, oh, I don't want to ask too many questions. I don't want to do too much, right? And then it turns into this place where you feel really comfortable, not only talking about what you're doing, but also. Let's do it, Deep. So let's go through the whole 50-50. This is a bad top, not a termination. That reverses the market. So this is strike one. So this makes it less likely to work already, guys. I'm going to tell you right now. So Jen, D, 50% of my triggers have made it through this fib. 50% have not. Does that make sense? So which area isn't broken? It's this one right here, right at 26. That's my trouble spot. This is the one that's not broken. That's my trouble spot. Make sense? So right now, everything is in play, guys. I've got a 50-50. It has the potential to break. I chose to get in at the highest point of resistance inside of favorable large triggers. And I'm just waiting for a reversal bar. It's either going to give me a reversal bar or it's not. But check it out. I want you to see where price went to. Right to the top of those synthetics. Do you see it? That's why our stop goes beyond the correction point. What's going to take me out of this trade? My KISS plan says if divergence prints, if I get a second divergence, or if I get a divergence on this trade, I have to exit the trade. If I don't get divergence on the trade, then I'm going to hold for my first target. Is everybody with me? Cheetah, we're doing it live, brother. Where are you at? How do we feel so far, guys? Momentum is still good. Smalls are still below, but they're turning, right? There's my reversal bar. I'm above the reversal bar. So now there's only two things that can happen. I'm following the KISS plan for management here. I'm either going to hit $100 worth of profit, or it's going to take me out at 47. I've got $70 risk on a medium probability trade. Is everybody with me so far? I'm not touching anything. It's either, Chris, I'm in at the mid-band, inside of favorable large triggers. Yes, I did just jump in because that's where it was when I opened up, but it's still rules-based, isn't it? I'm in just below the mid-band, inside of favorable large triggers. I have a 50-50. It has the potential to break, but it hasn't broken. Guys, this is not a high probability trade. This is a medium probability trade. So I'm asking myself, what's it going to take to get me out? Divergence on a 50-50 trade takes me out, which means that 1-2 ticks above this reversal bar, if this divergence is true, I'll know I'll have to close. So now I've only got 5 ticks of risk on this trade. Nope. So what happened, Doug? Small triggers cleared this fib, didn't reach this fib. I'm a 50-50 on 26. Does that make sense? I'm a 50-50 on 26. And I haven't reached 19 yet. Chris, do you know why I make it look easy? Because I have 10,000 pictures. Because I know exactly what my rules are, and I know them so stinking well that I don't have to hesitate and think through them. And the more you look for, the more rules you're going to end up trying to work through. Doug, show me a picture on your chart. Show me your chart. I want to see it. We may have a different midnight. We may have different data. There may be just a little discrepancy. Maybe there's a glitch somewhere. But if yours hit the fib, then good job not taking a trade, right? Did you guys see how many fluctuations I got right here? How many times the market went up and down, up and down, up and down? I don't care. I've got rules, guys. My rules say don't do a damn thing until either my stop gets hit or my target gets hit. That's all I can do. Those are my only options. Right on. And then the rule, Doug, is that price reaches, right? Why would I do that, Adamos? If I'm going to do that, why don't I just close the position and take it all? Because, Adamos, my job is to follow my plan. My job is to follow my rules to the letter. Because I don't have any fear if I'm following rules. I don't have any emotion if I'm following rules. I'm not moving stops arbitrarily if I'm following rules, right? All I'm doing is I'm saying, this is my entry per the rules. This is where my stop goes per the rules. And it's either got to hit my target or it's got to hit my stop. And I'll never be in control of either of those. I'll never be in control of either of those, Adamas. So all I'm going to do is sit on my hands and wait and see. Boy, they sure got close, didn't they? And Adriana, you usually have both targets. Well, my expectation with all this momentum and my great entry is that this area breaks, right, Adriana? And if this area breaks, doesn't it make sense that it would go down to the next one? So what's changed in this trade since entry, guys? What's changed? I'm on the right side of my small triggers now. It bounced exactly where the market said it was going to bounce. I've only got 5 ticks of risk. And damn it, I'm only 1 tick away from profits. don't have any idea what the market's going to do, Adriana. I don't know if it's going to hit my target. I don't know if it's going to hit my stop. I don't know if it's going to go to my second target. The only thing I'm sure of is that my rules say enter at the midband, move your stop accordingly. If divergence prints, you have to exit the trade. If it doesn't, sit on your darn hands and see if it hits your first target. That's it. That's my plan. And guys, it has gone from up to down to up to down to up to down to up to down. Oh, look at that. There's my first target. I'm break even, ladies and gentlemen. I'm break even because I followed rules. Let me get the markers on there. And now I'm break even, guys. And there's nothing for me to do. Either divergence prints and it takes me out of the trade, or it hits my second target. That's it. D, do whatever you want. Do whatever you want. Where does that put you? Break even plus 1? That's reasonable, isn't it? Pay your commissions? I already made my commission money. I'm already up $300, Morgan. So, Ollie, there is no we. There is zero we in day trading. I have a 50-50 trade. I have my small triggers through the area. I have my large triggers above the area. 26 has the potential to break because of the momentum. So I chose to take a medium probability trade. Wouldn't your stop get hit before divergence can print? Yeah, it would. Who cares? Divergence is an exit condition, right? And Adriana, you said that you would put yours right there? Nope. I'm either going full tilt boogie or not at all, guys. And if this were my own personal trade, this would have been my first target at 26. So watch this. 1, 2 ticks above the reversal bar marker if divergence is true. So what's changed in this trade, guys? I still have momentum. I still have the potential to break. And now my small triggers are in favor of the trade and my large triggers are rolling in favor of the trade. Why the hell are you guys so scared? I have no risk. I'm guaranteed. I've already been paid. Sit on your hands, ladies and gentlemen. Sit on your hands. Let your trading plan dictate. You guys are an emotional roller coaster. Ugh. But Mark, we're up 140. Take it, Mark. Take it. It's $140. No, Mark, now it's only 130. Shoot, you just gave it all away. Oh. Oh no, it's 120. What's going on? Guys, it's the end of the world. Oh, we're back to 130. Life is good. And I'm telling you, you guys are going to have to work through this, right? Because if you watch that P&L, it's going to drive you freaking nuts. It's going to drive you nuts. What if we did this instead of currency? What if you guys didn't know how much you were up or down? And all you had was your rules to go by. What if the only thing you had to go by was whether or not your rules were met or they weren't met? What if you didn't give yourself the burden of wins and losses, but rather only the burden of following rules? Does that take some of the pressure off? I still have momentum. Everything says down. Good Lord, it's breaking. When it hits that target, I want a written apology from everybody for trying to jump ship early. And what's going to be even funnier is if it hits 21 and reverses. Oh, bingo, guys. Congratulations to each and every one of you. What a great trade you just took. How much money did you make? Hold on. You just made $500. And now we've reached Fibonacci support and all the triggers are above. Are you going to hope it breaks, guys? Or are you going to take your money and wait for it to tell you that it has the chance to break? And guys, I do this when it sets up. And I'm so mad, Cheetah. Oh, Cheetah, you are in the room. He's the one that asked me if I could do this. I didn't have any rules met. So if you took this trade, right, and you jumped early, you better go back and annotate why you were a sissy. I'm just kidding. You're not a sissy. I'm just messing with you. But let's do it. Come on. Drag, drag, drag. I'm messing things up here. Here we go. All right. I'm struggling. Let's just go back to the editor real quick. So what you have to do, guys, is you have to say, where is it coming from? Does everybody see how that was the best momentum ever? That was odds favorable momentum 100% without question. You have to identify that it's a 50-50. You have to say no divergence, strong triggers, right? Is it okay to get in with the least amount of risk at the higher? If you got in here, guys, your stop still had to go there. Doesn't matter. You still did fine. And then you just have to come back. And you've got to look. What did I do? And it ended up breaking the area, didn't it? Isn't that it? I just closed it out. It ended up breaking the area. And it's still going down, guys. How many times does that happen? Morgan, have a great day at work. How many times does it break the area rather than bounce? We trade statistical advantages, guys. We trade what happens more often than it doesn't happen. So for you guys that are new, for you folks that are brand new, this is what we do every day, guys. We talk about these same trades every day. We go over these advantages every day. I give you a solid plan every day. The only thing that you have to do is do it. Pete, put the time in. He can do it. And Pete held for the fib. And Pete's like, Mark, you think you're a big deal, but I tripled your money. Great trade, Pete. Let me do something real quick. And guys, I want you to outproduce me because it means that you took the time to learn. I'm going to take Pete's 1480. Okay? And I'm going to cut that in half. Because not every day is a good day. And that puts him down to 740. And I'm going to multiply that by the number of trading days in a year. Is everybody looking at that number? It wasn't Pete's desire for the market to go down, right? Pete took the right trade and he managed it correctly. Pete followed the rules and managed it correctly. And guys, it's not the number of trades that you take. You don't have to be busy to be successful. It's trading with advantages. It's having a reason to enter and a reason to exit. And it's not throwing away money on these just BS. I don't really have momentum, but I hope it goes up, right? I don't really have a clear path, but I want it to go down. And I lost all my fibs. Oh, I'm still calculating. There we go. And it's being willing to get paid. And now I have weak triggers at a termination condition. Definitely not the same look as strong triggers at a termination condition. And we'll see what happens. But guys, they can be easy. They can be simple. So I'm going to encourage everybody in the room. Learn how to do the basics.